Test, Yeti. There we go. Okay. Sorry, guys. My mic wasn't responding for just a second, or I couldn't see the signal coming through. So wanted to do a couple test runs here. All right. Hope you guys are all doing well. A lot of stuff to talk about right now. Oh, don't worry, guys. I know there's no sound. I was running a test to make sure because Streamlabs is a very weird thing. But a lot of stuff to talk about today, everybody. We'll talk a little bit about the hurricane here. It's not going to cause too much disastery things for as far as the market and the economy. I don't think so. We should be okay there. We're going to talk a lot about the NASDAQ today, Bitcoin, Ethereum, what's going on about the economy, kind of continuing on where we left off yesterday, and talking about some new positions I'll probably be taking sometime next week. And the one I took yesterday is the one we were talking about with Bitcoin if it dropped back down to like 18,500 or so. So let's get started, guys. Maybe a good 2-hour stream here tonight, maybe a little bit longer depending on how many people are talking and engaging in the stream. I know a lot of people are watching the hurricane though, so that's going to be the big thing for everybody to watch. I'm actually curious to see what happens this weekend with the Tampa Bay, what they're going to do with their field and everything like that. So before I get started, hey, I am Broke. Hey, Biden, hope you guys doing well. Hey, Joseph Can, we'll talk about that actually too pretty soon. Discount Killer, thanks for reminding me, no sound. And Can talking about Biden was involved. Oh, that might be kind of interesting. I haven't heard the news about that just yet. And hey, Medi, hope you're doing well. And hey, Alex, what's up, Mike? Stock market sitting on the moon right now. What do you call it? I'm really excited to see what happens over the next week. This week has been absolutely like just crazy. And then you add on the hurricane with it. There's definitely going to be some things to watch here, guys. All right, so what you have here right now, everybody, is what I decided to do for this one chart, because I'm tired of having like multiple, like messing up my 200 weekly moving average. For the NASDAQ, you have the 200 weekly moving average, and then you're going to have the 200 moving average for whatever chart this is on. So if it's on the 15-minute chart, it'll be the 200 right here. But you can see right now, everybody, with the 200, now this is on the 15-minute chart. So you can see, according to the 15-minute chart, we didn't break down below it, but on the daily chart, wait, did it adjust again? Now on the daily chart, we haven't broken down below it. So we'll figure this out, everybody. I mean, the weekly chart says we broke above it or broke down below it. I'm just going to go with the weekly one. We tapped down below it temporarily and we came back up. I'm going to trust the weekly one. But just going over here against the NASDAQ, everybody. Well, there's a few things. On the daily chart, we did get into oversold territory. We're trying to bounce off of the RSI 30 level right now. If you guys care about the RSI, you guys know I just look at it a split second usually when putting some trades in. And we'll see how all this pans out. Okay, members, expect a video coming out tomorrow. Even though it's my birthday, we'll have a video talking to you guys about some call opportunities here. A lot of the same ones we talked about a few days ago. Now, I'm gonna get rid of the RSI right now, but that's just so you guys know we were at a low level of support there, or just the oversold territory. Let me hop out of that. Oscillator isn't really not much there for now. Now, it does look like we're trying to bounce off of the 200 weekly moving average. We still have to wait a little bit to see if we can really continue on this bounce. But we've had a few days this week. Everything's been fine. We have 2 more days. At this point, I was looking at CNBC.com. Futures are actually down, so we might continue to be choppy here. This is going to be that week where shorts are going to try to push us down. Longs are going to try to hold on for dear life. With how everybody's kind of vibing and feeling about the market, you guys would probably, I'm still pretty pessimistic, but I'm believing in that the traditional bounce that we have off of the 200 moving average on the weekly chart. I'm choosing to believe in that, and because of that, I haven't bought any calls yet. I was thinking of buying some calls for Apple today, and I probably will buy some tomorrow. YOLO plays here, or higher risk plays, not really YOLO, still decent opportunity to make some money there. But my point being here, continue to watch out for the NASDAQ and the 200 weekly moving average. I'm watching it closely, even on the 2-hour chart, guys. It seems to be a solid level of support. Now, this is just for the NASDAQ. The Dow's been a little bit more interesting as well. Maybe if I go over here to watch list, we can go to SPY too. SPY has been not as nice and flat. There hasn't been that strong level of support. So it's been kind of taking a leg down, another low, another low, another low. Today it finally popped up and broke back up above that resistance level right here of 369.63, only by a few pennies, but there's an opportunity for us to start moving back up here towards 374 or so for the SPY. You might actually see some people actually loading up on some SPY calls here pretty soon. I was looking for there's Dow. And you can see Dow, just like SPY, new lows, new lows, new lows. The NASDAQ hasn't actually reached any new 2022 lows. which is kind of interesting here. And I think it's because it's trying to follow that history of bouncing off of the 200 weekly moving average. Will it? We still have to wait and see, but you know, I think it's worth placing some bets on this, so to speak. So in the spirit of those bets, I guess I can tell you guys, last night, you guys know I was talking about how my 18,500 short, or excuse me, long, you know, Bitcoin popped up to 20,000 bucks over the past few days. Right up here, ended up breaking back down. I moved up my stop loss and I got stopped out of 19,000. I rebought last night. Thankfully, after the stream was over, we actually managed to have one more drop here. And that next drop brought us back down to 18,500 again. I opened up a new position right here. I kind of got lucky because, you know, normally you wouldn't be seeing it actually hit that, like, you know, didn't get that lucky. I got lucky. I almost wasn't able to complete the trade. Now, we managed to bounce back up to 19,455. My stop loss right now, I'm going to try to give it the benefit of the doubt. Even if we come back down, I'm going to give it some leeway here. This is a 10x play I've taken. I'm still fine if people were to take positions right now, although I'd probably hope for some type of dip to like somewhere around $19,000 or below, kind of what we were talking about yesterday. However, you know, for me personally, that stop loss is kind of around 5%. I think it is a little bit below it, just in case. So I'm risking about 50% of this position right now. Let's see how that works out. But I guess you could see at the same time here with the 10x leverage at 18,500, I'm currently up about 50% right now. So, you know, I'm doing okay, I guess you could say. I really do hope we can continue moving on. I don't like this choppiness here. You guys called it the Bart Simpson. I just call it like a rectangle or whatever. I don't want to see this continue on this path. I really want to see if the NASDAQ, SPY, Dow can really start to pump up. Maybe it happens on Friday. Maybe it doesn't happen tomorrow with everything going on with the hurricane. I was looking at it a few minutes ago, and you know, this thing, it's made landfall. You can see where the storm surge is at. It's still moving here, but this thing looks like it's moving fairly slow. So it might not be until like tomorrow, until like it's actually out of here. So you might see the markets not like that too much, or maybe frown upon it a little bit. So, you know, a lot of warnings and whatnot. You're going to see a lot of rain hit the south over here through, what is this, Columbia, Greenville, Charlotte area. I don't know much about the south. I haven't been down there too many times, mostly on, you know, road trips and whatnot, but not for, you know, hurricane watch. But, you know, I'm keeping an eye on it. If you guys are in Florida, hope you guys are all doing safe. I know some of you guys, or a large portion of our Floridians down in the southern part of the state, have lost power. So I'm hoping that, you know, everything kind of works out for everybody down there. Make sure I don't miss that. And hey, Starscream, thank you for upgrading to the Sapphire membership. I really, really do appreciate that. And thank you again yesterday for all the buying 5 memberships. I really do appreciate that, my man. And hey, Wes's Grocery Store. What's up, Mike? It's Wes. I'm getting really good at reading the charts, finally catching patterns, and been trading options and Apple calls for our bull flag. Dude, that is awesome right there. I'm hoping Apple itself can break out as well. We were just talking about a flag the other day. And I think we were talking about taking some options if it breaks out above it. I don't know if Apple broke out today from the flag. I didn't get a chance to watch it too much. I know that it was down a little bit today, but I didn't know if it actually closed up here. I could probably look at that FinViz here in the next few minutes too. But okay, but yeah, I'll come back to that in a second here. Before I do that, let me see what you guys are talking about here. And hey, Max, happy to see you, Mac, my man. And hey, Starscream, good to see you, man. What's up, everyone? I made 5% profit on LR swings from last night. Dude, nice. Profit is profit. Always making good money there. Let's see. Hey, Ennis. Hey, Mike, hope you're a good, happy birthday for tomorrow. I am. I will be streaming tomorrow, but more like in the, like, you know, around market close time. After that, I got to place a sushi order for my family. We're all going to get like a bunch of sushi rolls. I'm getting 2 sushi rolls. My sister's getting 2 sushi rolls. My mom's getting 2 sushi rolls, like really good sushi. And then I got everybody 1 cucumber roll just because they're like nice and kind of like filling. And then I got everybody 2. I'm getting everybody 2. Well, we're going to share 2 orders of gyoza, which is going to be really nice. And I'm getting surf clam as my sashimi dish. My mom's getting eel for her sashimi dish, and my sister's getting eel for her sashimi dish. I don't know. I've had eel so many times. Both my sushi rolls contain eel. I'm a huge eel fan. But it's going to be a really good birthday. I'm going to chill and relax and just sleep. maybe have some fun with Loki. Today, me and Loki went to the dog park. So I basically did dog park and worked like maybe 4 or 5 hours on editing a video for you guys. Maybe not that long, maybe like 3. Yeah, not editing, but like recording, finishing up the recording and editing the video. So pretty soon you guys are going to have 5 dividend plays that I'm currently in and that you guys will probably like over the next few months. And I kind of give you guidance on, hey, you can start buying them now. You might want to wait for a dump, that type of stuff. So I'm excited to see where all this goes. And hey, Discount, yo, Mike, love to hear your take on Apple possible moves leading into October 7th. Bought 5 super cheap October 7th. 160 calls say when that big pullback happened, it was up $100 on the market close. Thanks, dude. That's awesome. I know they had some negative news about slowing down production and stuff like that. That's going to eventually hurt earnings down the road. But I think right now those cheap calls are the things that I would really want to be buying right now, expiring I would say next Friday. I think that's the 6th that you're talking about. Let me double check that. 7th, is that what we said? 7th? Yeah, October 7th, my bad. Yeah, so I think those are really fantastic calls. If I was to advise anybody on options plays right now, just because I like to trade Apple, I would say Apple is a strong buy for calls right now. I'll put out a video talking more about it tomorrow. But from what I can show you guys right now is, I don't know if I actually, which section I had the Apple charts on for you guys. So there's 2 things I really want to see happen right here. I wonder if I can. I was really hoping from a daily perspective we could stay in this range. I didn't like that we kind of opened up low then managed to bounce up. But if you look at it from a daily chart perspective, we still managed to hold here. I still want to see this breakout occur right there, and if it does, I'll be really happy to buy. In fact, I'd actually be okay buying today, honestly, or even I guess tomorrow for me. As long as we can actually open up like above 148, I'd be happy to open a position right here. My fear is that, or my hope and fear kind of, it kind of all revolves around this breakout point right here. But more specifically than that is going to be this 20 moving average. I think I want to see Apple break above that and we start heading back up here to maybe 160 before we have a strong pullback. That's the hope here. That might take more than the week. So if you're buying these longer term, or excuse me, these short term options that expire Friday and they're pretty far out of the money, like maybe 160 or above, yours at 160 calls, be careful of holding them past maybe Monday. That's going to be unless we're really going in a good direction. You might want to scale out some and then let like the last 2 or 3 or however many you have, like, normally I buy 20 to 50 options. At the end of it, I usually have 5 or 10 left on the table, like 10 to 20%. I want to see where those go towards Friday. If it's in the money, I'll hold it. If it looks like, we're kind of teetering it a little bit, maybe I sell them all off a little bit earlier, but I would at least try to hold these until Friday, maybe Monday. And hopefully the breakup can actually happen tomorrow. If it can, I'd be very, very happy about that. I was really hoping we might be able to hold that support level though, but you know what? We managed to hold on the daily chart and that's usually what I go off of here. But if we can just break out, I'd be very, very happy about that. Very, very happy. Until then, did we have a general level of support right here? I mean, not really. We'll have to wait and see a little bit later on. But yeah, they're good. Just remember, if you hold on to them for too long and Apple stays at the 150 level and it doesn't get closer to 160, you are going to see that theta decay really start to kill those options. So just keep an eye on it, okay? One other thing over here, everybody. There we go. The dollar index is starting to come back down. We might be having a slight pullback effect here, pullback. Usually these last for at least a few days, and then afterwards we end up spiking again. So we're most likely going to spike again here, guys, down the road. But maybe we have a few days of cooling off. I don't know if you guys have been hearing what's been going on over in Europe and England, but England right now is in crisis mode, and the dollar index just keeps on spiking and spiking and spiking. Excuse me. Geez, drinking too much water. I mean, here's from Yahoo Finance. Like the British economy just like sounds like it's in free fall. I have no idea what's going on over there personally, guys. Like, I've been reading articles about it, but they all just say it's a panic or it's a crisis without really going into too many details of what exactly is going on here. All I hear about is this new plan that Liz Truss came out with about lowering taxes, spending money, and apparently the market didn't like that, or I don't know if the parliament didn't like it. I don't really know. I'm not really into your UK politics. I don't know much about it, but basically here's what's going on from like a perspective of what matters to us. Update: Bank of England, okay, whatever. Bank of England, update 5, that's what it probably is. Bank of England to buy 65 billion pounds of UK bonds to stem rout. All right, so Bank of England steps in to buy long-dated bonds. 30-year yields tumbled by 100 basis points after Bank of England support. Bank of England to buy 5 billion pounds of glitz in a day. I don't know what a glit is to them. Glit sales are due to start next week, postponed. Bank of England still aims to reduce QE, quantitative easing, holding by 80 billion sterling, maybe. So the Bank of England stepped into Britain's bond market to stem a market rout, pledged to buy around 65 billion pounds, $69 billion of long-dated gilts after the new government tax cuts planned to trigger the biggest sell-off in decades. Citing potential risk to the stability of the financial system, the BOE also delayed Wednesday the start of a program to sell down its 838 billion pounds of government bond holdings, which have been due to begin next week. Were dysfunction in this market continue or worsen, there would be a material risk to UK financial stability. So they're actually having a financial crisis right now, or they're trying to stop themselves from having a financial crisis. That's probably a better way to say it. But it seems like there's some chaos, and that chaos may come back over to hurt us in the short term, or maybe even the medium term. So we'll have to watch this pretty closely. Out of all the news that I saw, from what I understand here, is one of the main reasons they decided to step into the bond markets here, you know, dealing with debt of the countries and stuff like that. I don't know if they have T-bills and stuff like that like we have them. But if the bonds kept on crashing and going down and down and down without the support of the Bank of England, a lot of pension funds would be losing a lot of money, and they'd be forced to sell off those bonds, which would cause a major crash on top of itself. Remember, guys, bonds are usually the safe play when the market's very volatile. Right now, the UK bonds apparently are not doing well at all. American bonds are, I mean, they're just skyrocketing right now, but the not European, but the Bank of England, Britain bonds, whatever, sorry guys, is just all over the place. So, take some time to read about what's going on in England. It seems like it's a furious crisis. I don't like. I've been looking for about a week now, guys. Even NBC News, they're probably not going to tell me much here. Let me see. Let's see. Her conservative government 45 billion plan to slash taxes, particularly for the country's highest earners, has sent shockwaves through the financial markets, causing the pound to plummet and leaving Truss's own political future in sudden doubt just 3 weeks after taking office. You know, why is everything so, it must be just for mobile readers only or something like that. But you know, so they might even actually have one of those things called a snap election in Britain, which means they can have an election just like that, which is kind of cool if they're like dissatisfied. So I don't know what's going on over in England, guys. I need to learn more about it, but most stories kind of like say the same thing over and over again. It's kind of like a twinge of politics. Something's bad is happening. You know, and I'm a really data analytical guy, and I want to figure out why the data is telling everybody to sell at this point over there. I'll have to look into that a little bit more though. But yeah, keep an eye on this. We're still in this range over here where you might want to call this some type of selling zone. You know, you go all the way back here to like the 70s. You got some resistance up here, 2001. Actually, let me just type in the 2-month chart so you guys can see what I'm talking about. Or maybe, can I do a 6-month chart? Will that actually work? Okay, yeah, there you go. So this is a 6-month chart for the dollar index here. All right. You can see right around here, we are in a pretty decent selling zone. Let's go to ellipse, I guess. Right, you got a decent selling zone up here. We're fairly close to it. If I kind of drag this out a little bit, you'll see we're in it. We're just kind of testing it out a little bit. We're probably going to go up higher until Jerome Powell stops raising interest rates height. So we might actually just hit a double top all the way up here of around 120. I think when the dollar index hits $120, I think that'd be a strong reason to start buying up cryptocurrencies in particular, maybe more traditional assets as well. But I want to see if we can bottom out and flush out, because the traditional markets really have to worry about the earnings and, you know, margins and, you know, results, you know, quarterly results, whereas crypto we just kind of go off of whatever we like here, don't we? So yeah, keep an eye on this 6 month chart. I mean, you know, you're not going to really use a 6 month chart ever, but I just wanted to clearly show you guys the levels of resistance that we're dealing with, and we're getting into that territory where we're closer to the end of all this, guys, than we are to the beginning. We probably need 1 or 2 major flush outs though before we hit that promised land of the lows of 2022 or 2023, whichever ones are more important here. All right. Oh yeah, just so you guys know, not a big move here, not a big move at all. Go to the daily chart right here. Oil's been moving up just a little bit, but it moved up a while here, moved up a while here. It's still been in this downtrend, but it has started to tweak a little bit here, just so you guys know. You guys probably have seen gas prices go up a little bit. Some of you guys maybe more, but gas prices are like, you know, the decline has slowed down a little bit over the past few days, probably because of the hurricane. People are just kind of worried about what's going on. Right. All right, but so far, guys, stuff is up today. I like what I see. I have longs right now, no shorts, except for my long-term shorts, of course. But in the short term here, guys, I like what I see. I took an opportunity from 18,500 last night. Anything under 20,000, I guess, is something I would like to see. I really want to see one of those traditional breakouts above the 20-day moving average, a nice big pump, just like how we dump right afterwards, right? I want to see those big pumps or those nice moves that come as we break above the moving average. And you can see it doesn't always work out as far as huge pumps, I guess multi-day nice pumps, but I want to see one day of just having a nice large move, and I'm hoping that day can be today. Honestly, please let it be today. If it's tomorrow, or if it's like Friday's candle, sure, okay, but I really prefer for it to be today's, just so I can like hurry up and have a nice position. Maybe it'll run up to 20,673 at a little bit of resistance up here where that 20-day moving average is. You know, I'd be very, very happy to sell right there, or just sell a portion of it right there and see what happens if we start heading towards 21,000. And that's only if we get a solid bump from the stock market here. If we don't get that bump, you know, it's just not going to be the pleasant time we all want it to be right now. All right. And hey, Navadi, excuse me. Welcome back, my man. Let's see. And hey, Kyle, would it be wise to short ABOS from the stock market tomorrow? It's up over 100% today. ABOS. So pharmaceuticals, you guys know me. I don't really touch the pharmaceuticals too much because they're very, very risky. The short float for this was only 2%, so it wasn't so much of a squeeze as they probably had some good data come out. What's going on? What was the news today? I don't know what the news was here today that caused this to really skyrocket up. Maybe rumors or something, but I'm looking at the news down here and I don't see anything. The last news article was all the way from September 8th. That's a while ago now. If you're going to try to do this, just be very, very careful. If you'd probably want to be day trading instead of long trading. I would say if you want to try day trading this, go for it. Just be careful. Usually biotech companies, they're very news based, so they're usually kind of in the gutter raising money with offerings and stuff like that. Then all of a sudden when they have a what do you call those, not a clinic, when you have a trial, you know, like a medical trial, whatever, when it has positive results, usually that's when you see the big old spikes like what you saw just today. I don't know what actually happened here. Maybe a third party ended up buying a bunch of shares. I don't see any information here, just some options that were exercised back November 30th. That's like last year. I don't see anything really here, so it'd be risky. It'd probably be pretty fun. I would say I'd only do it if I wanted to be day trading. Swing trading makes it seem a little bit more difficult at this point in time because you just don't know how far that sucker's gonna go up. And when biotech companies have their big pops, they can go really high really fast, and if you're holding those shorts overnight, you can lose a couple 100% just within one day. So it's a huge risk with something like that, but I would say day trading, yeah, it's probably not too big of a risk there as well. You can see what the chart's doing. You can enter and exit as you please. Oh yeah, so all timers. Yeah, okay, there you go. That's the drug I was looking for. I was looking for a report on it. But yeah, risky, but you can mitigate a lot of that risk just by day trading. Just be careful. It could most likely come down over the next few days, probably next week, maybe even tomorrow actually. Palm Beach skated by. That's great. The less damage that's done by the hurricane, the better here. And hey, Monica, hope you're doing well. Don't forget the dragon rolls. Oh yeah, I got myself a dragon Maki. A dragon Maki is, I don't even know what it is. Hold on here, guys. Oh, there's like multiple ones. Oh geez. Oh no, one's here, one's okay. Let's see. Oh, okay, that's what. Autocorrect had me looking weird. See all photos. Menu. Oh, all the menus I want to see, they all kind of look kind of funny here. And it won't let me zoom in. Oh, there we go. A dragon Maki is a tempura Maki, and a tempura Maki is prawns, avocado, and fish roe. So it's that. And then on top of it, you add eel and masago. So it's like, you know, prawns on the inside, eel on top. It's really, really good. Totally forgot what it was for a second. I love everything to do with eel. I love eel so much, guys. You guys have no idea. And hey, GT, evening, Michael. Gas jumped 30 cents in the last 10 days here in Arizona. I feel like the next CPI is going to come down, come in hot. I mean, I don't know, guys. I really don't know at this point because of everything going on and what's about to happen with Florida. That may kind of influence things a little bit. I'm hoping it's in the 7s and not in the 8s. If it's in the 7s, we have a really nice rally on our hands. If it's in the 8s, I mean, Jerome Powell has every right to say we're going to be crushing inflation. We're going to 4%. We're going to 5%, whatever his rate is. And then we're going to be going down fairly hard. Now, the interesting thing here with Jerome Powell, though, is that we'll talk about it a little bit. I'll answer some of you guys' questions, then we'll talk about Jerome Powell. It's kind of a rant I have, but it's not like it's, you know, there's not much we can do about Jerome Powell right now. Let's see. And hey, Chef, you bought some puts too? Dude, nice. Hey, Alex, I bought some high risk puts at the end of the day. Couldn't resist as the market rallied so much. It was a pretty nice move there, guys. And those YOLO puts and calls right now are going to be the best things you can do because not even I know what's going to happen right now. I am making bets here. But, you know, we don't know which way the market wants to tank, especially with all this crazy news coming out. Britain may be the wild card pretty soon. If Britain goes into a full-blown financial crisis, that's going to affect Europe and us because, you know, there's so much debt that's owned by other countries. When they can't fix that, you know, it just causes a lot of problems really fast. If you guys have watched any of the movies that kind of went over the 2008 financial crisis, not many of them, but a couple of them, I think actually maybe only one of them, actually talked about how bad other countries had how bad their financial crisis was just because of America's own financial crisis, how we just like spread it across the world because everybody uses the dollar. At least we're a little bit lucky that not everybody uses the pound, right? But the people that use the pound, that's pure crisis, man. And I'm not just talking about England or Great Britain. You know, any country that uses the pound, they're not looking at being as happy right now. Especially Canada. I think no, they have the Canadian dollar. They're lucky. If they saw the pound international trade would just be terrible for them because they have to buy everything with American dollars, right? But I don't even know I don't even look at the Canadian dollar, but I'm pretty sure it's probably not doing as bad as other currencies out there. And hey, discount killer, dude, that's awesome. Made $300. That is a nice little chunk of change right there. Definitely add that to the trading journal and write down why you made the trade. Basically playing with the house money on the 5 calls I bought today. There you go. Why is my phone coming off the thing? I keep on getting messages from Twitter. Let's see. And hey, Grand Peasy, how often my members only streams? I try to do them every Saturday, and this is basically how they go. because not many people show up to them, and I'm perfectly fine with that, honestly. So on Saturdays and Sundays, I'm usually working and doing my own technical analysis on stocks that I want to trade. And these are usually on the same set of stocks. I usually don't try to diverge too much on stocks. You know, you find a good 10 or 20 you like and you stick with them. I really don't feel the need to go out and look for a whole bunch of other stuff. So I'll be updating different charts, whether it be Apple, Nvidia, you know, Tesla, whatever it is. I'll be updating it and keeping an eye on it, Microsoft, and looking at the technicals, drawing new technicals, looking for day trading opportunities, especially right now, more day trading than swing trading for me. And then people will be watching me do the technicals and just kind of chilling out, not saying anything. Some people will have a question. If anybody has a question, I'll kind of finish up what I'm doing on whatever stock I'm looking at, just like, you know, finish up putting the trend line or whatever. And then we'll take it maybe about a 15 to like a 10 to 20 minute, depending on the stock, a 10 to 20 minute look and do a deep dive on the stock, which means we're going over Ganfan levels, trend line, support, resistance, moving averages, historical context, option flow data, you know, from whale streams. So we're looking at a whole bunch of stuff here, trying to formulate a plan for buying or buying calls or puts, or just buying shares if people like to do that as well. So it kind of depends on what they want to talk about. Some people want to talk about crypto. We'll talk about crypto. Crypto is a lot easier than the stock market because the stock market relies on so many other factors. Crypto is just kind of a wild west thing, which makes it, you know, more difficult. But you know, when we're talking about my bread and butter stuff like Apple, I can easily just say, hey, I'd like to buy some calls on this one. I want to see a bounce happen. I want to see a breakout occur at this point in time. It's basically designed to help you formulate a plan for a stock. And that breakout or that breakdown might not happen for a few more days, but whenever it does happen, you have a solid plan on your, you know, in your books to make a good amount of money off it. That's the main reason I have the members only streams. But once a week, usually on Saturdays, around 12 o'clock my time Saturday, so I can kind of move it around a little bit. But I'm trying to aim around noon every Saturday if I can, and then maybe an extra one every now and again if I'm just like doing some extra work late at night. Lately I've been kind of busy doing a top 5 dividend stocks for you or something like that. I don't know what the name of the video is going to be, but yeah, a dividend stock video for you guys, so you guys can end up buying some high yield dividend plays during the this upcoming recession, market crash, whatever. And that way you guys are still making money, and these plays usually have really strong rebounds, so you're not going to be in the gutters for too long before the yields start picking back up. Let's see. And hey, you're watching. I know somebody talked about this a few minutes ago. I know there was something that went on with the pipeline, but I honestly have not looked into it. I saw the bubbles coming up. That's in the water. Yeah, this picture. This is all I saw. The video of it. I mean, I don't know NPR. I don't know any of these. Let's see. Okay, here's some Associated Press. Blast proceed, Baltic pipeline leak, sabotage seen likely. Yeah, I heard about this. For what I understand, there is nothing flowing through these pipes right now, so there's no environmental disaster. I'm not entirely sure about that, but I'll read on here. But Denmark believes deliberate actions caused big leaks in 2 natural gas pipelines running under the Baltic Sea from Russia to Germany, and seismologists said powerful explosions preceded the leaks. Okay, so that seems like a bombing to me. If their seismologists are saying, hey, there was a big shake, right? It's not like a kaiju is going to be rocking out in the water anytime soon. But they say European leaders and experts pointed to the possible sabotage amid the energy standoff with Russia provoked by the war in Ukraine. Although filled with gas, neither pipeline is currently supplying it to Europe. So maybe it was filled up. I'm not entirely sure. That doesn't look black and nasty. I don't know. Supplying, we'll wait, see. It's the authorities' clear assessment that these are deliberate actions, not accidents, Danish Prime Minister Mette Frederiksen said on Tuesday. But she added there is no information indicating who could be behind it. Frederiksen rejected the suggestion that the incident was an attack on Denmark, saying the leaks occurred in international waters. The incident overshadowed the inauguration of a long-awaited pipeline that would bring Norwegian gas to Poland to bolster the continent's energy independence from Moscow. The first explosion was recorded early Monday, southeast of the Danish island of Bornholm, said Bjorn Lund, director of the Swedish National Seismic Network. A second stronger blast northeast of the island that night was equivalent to a magnitude 2.3 earthquake. Seismic stations in Denmark, Norway, and Finland also registered the explosions. So it seems like there was a bombing of some type. We don't know what type of bombing, probably Russia, but there's no evidence of that right now, probably. but as they kind of get information, we'll see. I bet some CIA operative knows what's going on. Right. But yeah, the problem here is this part. Currently, it is not possible to estimate a time frame for restoring the gas transport infrastructure. The company said it doesn't matter much right now because of everything going on with Europe and Ukraine, Russia. But you know, they probably want to have this fixed by the time the war is over, so they can start getting that good old you know, Russian gas, because they're going to want it back ASAP here. From what I understand, Europe is not doing good from an energy perspective, and they really need some energy here. There's just not much energy they can really get at this point because it's coming from the majority of like America, right? We can only ship so much over there. It's not like we have all the massive pipelines that we need to kind of just ship tons and tons of oil. Don't even know how much that would cost, guys. See. And hey, Jack, thoughts on the Tama Doge craze? Usually when it comes to crazes or meme events that are really crazy, what I tend to do is I will buy some and just hold on to it and see where it goes, and that's it. And then I'll have like a 20 to 30% stop loss to see what happens, and I'll kind of ride the wave up. As it gets higher and higher, I'll probably scale up more and more, and then whenever it dumps, I'll probably add some more in there just for fun, and then kind of wait the whole process out again. But the usually longer term holds, whenever you see a craze, it's most likely a pump and dump. You're just trying to make as much money as you can during the pump, and it might have a dump and then a kind of another pump every now and again. That's why you might want to add more money in there, but it's probably a huge risk. Be careful with it. Treat it as a very risky play. So when it comes to more risky plays, you're probably not going to be putting as much money into it. But it's up to you to determine how much is enough money for you to make a good amount of good return for going in such a high risk coin, right? But I would say, you know, have fun with it, buy and hold, understand it's a very risky play. It'll most likely dump over the next few days. They always dump. But until it dumps, you're free to try to make as much money as you want to. Just be careful on that dump side there. See, and hey, Kevin, right now, if Bitcoin wants to pump up, it has to rely on the NASDAQ here really continuing that move that we talked about the other day. And you can even see like with Ethereum right now, let's talk about the NASDAQ first, just so I can kind of get out of the way. The heck? Oh, this is what I was talking about as a longer term opportunity for us to break out or something like that. Yeah, we don't need that right now. We're trying to bounce off of the 200 weekly moving average. The opportunity to buy is still kind of right now, if you think about it, because over the next few weeks, if we try to make a similar bounce, like we do with the 2008 financial crisis, .com bubble, if we want to have that bounce, we're probably going to bounce for at least a few weeks. So right now is still an opportunity if you guys want to buy shares or longer term options like a month away. Kind of risky because we're kind of in this perilous spot where like we have hurricanes going on, wars going on. So there's a little bit more added risk than normal. So what I'm doing right now is primarily day trading options and thinking about buying some short-term options for next Friday, primarily for Apple here. And then if I'm going to be buying any longer-term options, I'm probably having those options expire anywhere from the, like maybe the, let me get a different chart up here, my calendar. Probably going to be the 14th or the 21st at this point, maybe the 28th, but I probably would wait for the setups for the 28th one. So probably expiring October 14th or expiring October 21st. That's usually what I'm gonna be looking at here. If I'm going to be loading up on some calls for long term, they'd be pretty far out. They'd probably cost about under $2 for most of these calls, and I just want to ride the wave if we manage to have a solid bounce. But you never know exactly when that bounce is going to occur, and you never know exactly how that bounce is going to come. We might not have a solid bounce that just goes straight up. We may have one of these where it's just, you know, sideways up quite a bit, but choppy, and in which case that kills your options due to theta, right? So you might have to sell them early, then rebuy them down the road before a breakout, and that's where you look at each individual stock here. But according to Bitcoin and what we're looking at right now, you know, Bitcoin's at a buying zone right now. Go over here, back up to the weekly chart. You know, we're at the lows. Nice little buying zone down here. It's a big gamble right now. Nobody knows which way we're going to go. If we're going to break down or break up, I'm trying to use that historical knowledge from the Nasdaq and, you know, what it does around the 200 weekly moving average to kind of estimate, hey, we should have a bounce up here pretty soon. Then we're going to have a big question mark of what happens as we approach the $21,500 level. That's where we can have a breakout. But, you know, we also have to deal with the 20-week moving average. And historically, what I like about this is we've actually broken out above the 20-week moving average before, even in this bearish cycle. So that, you know, I'm like, yeah, we can do it again. Maybe the 20 isn't going to be the worst thing ever. Maybe we'll, you know, we'll break down, we'll pop above it, then we'll, and then we'll eventually come back down a few weeks later. You know, if I go back over here, broke above it here, and then we came down, and then we kind of had our crash after all said and done. Over here, had our breakdown. We really didn't break out above it too much until we have ultimately found, oh, actually the bottom was over here. So we managed to break above it and then come back down. Not as nice over here in 2015, but I guess the last example we have is only from 2018, which is still a little bit like 4 years ago, right? But yeah, so that's what I'm looking at right now. I'm hoping to find some type of bullish pop, but that's for Bitcoin, because Bitcoin usually follows the index. For the majority of the stocks out there, it's going to be much different, and you guys are going to have to be much more perceptive of what's going on in the environment there. Oh, let me just put this right here. Let's see if Bitcoin can continue to pump up here. I'd love to see that. There we go. And I can do some TI on Lucid. My friend is looking for the bottom. Dude, the bottom is going to be some random number in the middle of nowhere at this point. So you know me, Ken, I have a long-term position in this. You know, it's had a really nice pump up since the SPAC deal way back in the day, when all the, you know, all the rumors are flying around. Oh, person A, person B are on a plane. This means we're going to have the deal. Then all of a sudden pump. I really sold off. I sold off a large chunk of my Lucid right around here at 30 bucks. I was so mad when it ran up to 65. You guys have no idea. And I like scaled out, and I scaled out, but I sold way too early there during the drop day. However, you know, I bought a lot back over here around the $20 range. It's currently like down about 25% right now. I'm willing to hold it because I think Lucid is going to be fine in the long run here. But I do think that they're going to have a few offerings now and again, or they're going to have to find some way to really rake in the cash here. And I just don't see that happening in this current environment. But as far as Lucid is concerned here, I mean, maybe just go to a monthly chart here just so I can just have a nice low to look at. Oh gosh, did I forget to put all this stuff on? So let's go there. I mean, yowza. Did I work on the weekly chart at all? Not really. A little bit. Okay, at least this level is working for us a little bit right here. As far as the bottom of Lucid, if we kind of go through our normal move downs, when we have a big market crash, you see a lot of these type of stocks. It's more of a fundamental issue, not even a technical one. You see them drop around 30 to, let's say, 50% from where, like, you know, from where we are right now. They start, you know, Nasdaq breaks down. So if this is around 15 bucks, I think you could see this probably bottom out somewhere between $5 and $8. My problem with it is if we go over here and actually look at Lucid on Finviz. All right, Lucid Group, consumer, cyclical, auto manufacturers. Let me zoom in here for you very fast. Look above my head. Look at that income right there. They're burning through money, So, that's going to be a big hindrance for them going forward, which means it might just be close to the $5 range of bottoming out, because they're going to have to find some way to make money. You could already imagine that they have, let me go over here to the website very fast. Let me back out of this very fast. I'm really zoomed in. All right. So luxury electric cars. Okay. It's kind of better than luxury because the regular average person is not going to have money to be buying cars over the next year, of course. But the fact that they're still going to be taking expensive out loans, you know, the taxes on a car like this, depending on what state you're in, like, if I want to, as this is so much more complicated than it has to be. Lucid Air, design yours. Here we go, design yours. Grand Air Touring, Air Pure, Dream Edition, Air Sapphire. Okay, whatever, I'll just get this one. Okay, design the car. All right, so you know, performance, you know, I'm a rich guy. I want a really nice car. I want the infinite black, because why else would you know, you got to get a black car, right? Platinum, stealth. Let's get the stealth. Looks kind of, oh yeah, that looks good. Tahoe interior, I kind of like that brown. Doesn't get as dirty. Let's see. So charging port, all that good stuff comes included. Okay, so I'm gonna view my summary and reserve how much. Okay, so it's $185,000 for this car. It would be available in Q1 of 2023. Not too far off, not too far off at all. Now the problem with that is over here in Washington, the taxes are like 10%. So that's 10% of $185,000, which is about $18,500 or so. And then you got to add on the cost of a loan. Those are going to have a hard time selling cars here, and you're going to see their growth take a big hit. Kind of zoom out here as far as Lucid. Ever since they kind of opened up, you can really see they've come down high from the $57 range. Go down here very fast. Anything else? No options have been sold off. That's good. Or no positions have been sold off. But you know, growth this year has slowed down. Yeah, 572%. Return on assets has been down 27. Return on equity is down 45. Return on investment is down 26. You know, it's gonna be a while before this thing finds the bottom. I would probably guess somewhere between $5 and $8. I'd be happy, honestly, just to start buying it when it hits under $10. Anything under 10 is really good for me. But if you really want that bottom, you know, $5 to $8, somewhere around there. If it goes down lower than that, I can understand it, but I hope it doesn't actually go down that low. And hey, Monica, I have accumulated a very large position of FTNT with the average around 49 plus option call position expiring October 21st. Call position is 30% up. That's awesome. FTNT, yeah, I used to trade FTNT a lot last year. I haven't traded it so much after the split occurred, but it really is a good company there. They have some amazing growth right now. This is the weekly chart, so you guys can really see what happened last year, over the past few years. I mean, this thing just kept on going parabolic, and specifically last year, I mean, 2021, you know, whew, rocket ship. So now what you're hoping for is it found a relative bottom here, right? Somewhere around the $48 range. And now you're hoping for some type of short reversal. Your price target for this reversal really is going to be the 20-week moving average. I would probably cut it a little bit closer and just say you're hoping for 53 bucks. Now, you know, if you pop it up here, that's about a 7% return, about $3.71 per share return. That's what I would personally look to be selling out of this. Now, you have options expiring a while away, so you definitely have plenty of time here. So let me go back to the daily chart. You know, I'd be looking for, I could actually move this. I'd go off for the weekly chart, not the daily chart here. Hopefully for a double bottom play, it really decides to pop up over the, let's say by next Wednesday or so, next Thursday. I would like to see a breakout and a retest sometime by Wednesday of about 53 bucks, 53.78 or so. That's what I'd be hoping for. Then after that, with kind of how crazy this move is, we have a low. This is still going to be the low for us. Okay. You might have an opportunity to hit a few targets. The first one is going to be 56 bucks. After that, you're going to be hitting the 200 daily moving average around $60, $59.26. I'd probably start scaling out again around 53.78 with whatever you want to scale, whatever you leave on the table, which could be 50%, 60%. It's all up to you. I would start, you know, scaling out as we hit each individual level after this. So probably around 56 bucks, 57 bucks scale out, then up here around 59 bucks. If we get up here, I'd probably would be like 95% out of my position if it comes to $59. After that, let those last few calls, see what happens. You can actually see how the 62 bucks right here times up with this older level of resistance we have from, you know, early August, you know, and early June as well. So you know, you can hope for this Goldilocks zone here. I don't know how crazy this rally is going to be, but you know, I'd be hoping to start selling off around 54 bucks, and every dollar afterwards maybe shave off 5 or 10% till you feel like you've made enough profit off of it. But yeah, it looks fine to me. You're betting on the market holding up right here, which I think everybody is. That's really buying at this zone. But yeah, it's a solid play. FTNT is one of my favorite stocks out there. It usually works pretty well, and this is actually something that a lot of people like to day trade here. So I think you're going to see an opportunity, you know, for some day trading here as well. I'd probably want to see it stabilize just a little bit more though. Wish it didn't break down below this low here, but I guess it's still the support level from right down here, I'm guessing. Yeah, okay, that's what you're looking for. If I was to have a stop loss, it'd probably be around $47.42 right now. But I would have bought a couple days ago as it was down here, not so much today. But that's just me being greedy. Tomorrow you could see a nice breakout above the 50 moving average on the 4-hour chart. That could lead to a nice little pump. Hopefully it doesn't end up being like this, but we've already broken out above the 20 here as well, so that's what resistance isn't there anymore. But yeah, this is looking like a good play, Monica. Just hope the market really stays strong, and yeah, this should be fine for you. And even Bitcoin, I want to see Bitcoin break out above its 200 again on the 4-hour chart, and then I also want to see it break out above the 20. Last time I broke above the 20, it was great. Getting very, very close. And, you know, going off of a daily chart here, you know, this led to a nice golden cross with a 20-day moving average cross above 50. Well, we're getting a nice pump here. We can have another golden cross with a 20 crosses above the 50 again. And, you know, you can see some pretty nice profits being made. Hopefully my position ends up working out. Bitcoin's up 155 bucks in the last hour and 50 minutes or so. Not looking too bad. The market's a little bit more mixed, but I think the majority of things are green right now on my screen, or unch. So we're in a good spot. But I mean, guys, I would have to imagine that sometime in the next like 2-3 hours. Let me go over here. Let me double check this. Next day, let's just say next day, sometime in the next 24 hours, we have to make an attempt for a pretty sizable pop here. That pop is going to be what everybody's waiting for, and the loading zone right now is now, or last night when I was telling you guys, hey, if we drop back down to 18,500, I'd be happy to buy some more up here again. So patiently waiting, but yeah, I'm more long than short right now. Although I think in the stock market, you can kind of be either or, because so many stocks are crumbling and so many stocks are kind of holding support. A little bit different over the stock market, but for crypto, more bullish on it than I am the stock, each individual stock out there. Let's see, it's natural gas and oil. Oh, okay. Well, oh, gas. Yeah, natural gas. Okay, I'm totally misread that then. I mean, it doesn't affect too much stuff as far as, you know, what I'm thinking. Europe still needs the energy, and they're not going to have it for winter. And I don't know if it's supposed to be a very, very bad winter in Europe this year. I just don't know. Maybe the almanac knows, but I'm hoping it's not too bad, so they don't have to worry about running out of energy. If they start running out of energy, and their corporations and factories and manufacturing sector can't, you know, work, you're going to see a disaster happen over there, because they can't get paid. You know, unless the government wants to come in here and spend a lot more money, which leads to inflation, which leads to financial crises and stuff. So we could be looking at just a major disaster here, but I don't think it's gonna be that bad. I'm hoping it's not, at least. Let's see. And hey, Tony, happy to see you back, man. I'm doing pretty well. It's okay to be late, my man. YouTube doesn't really notify people anymore that I'm live. I think YouTube knows that the crypto streams are kind of dying off bit by bit. So they just like stop notifying people as much. I think there's only like a handful of streamers these days online. But what I've been able to do here is what I'm going to start doing tonight. After every stream, I'm going to put the next stream up, so you guys will see on my channel like, hey, Michael has a channel tomorrow at 12 o'clock because it's my birthday, so I'm not going to be streaming at 7 o'clock or 6 o'clock at the normal times. But you guys should see that stream is on, so you guys have tons of time to click on it and say notify me when the stream is live, and hopefully it notifies you then. Hopefully. Right? But happy to see you back, Tony. And hey, Rodriguez, what do I think about the Micron technology earnings play? Oh, hold on a second. Loki wants a treat. You guys can say hi to him. Oh, I went to the store today and bought him a bunch of treats. Loki, but tiny ones for him to be trading. There you go. Okay, so you're talking about, and thank you for becoming a member, Rodriguez. I always appreciate it. Micron technology. That's just MU. So earnings are always very risky, so they're kind of a YOLO play within themselves, so just be careful. The best thing you could do is to buy two sets of options, calls and puts that are very far out of the money, that expire 29th, probably this Friday. And then from there, if it has a sudden spike, then you're going to be able to make a lot of money really fast, because with the any set of options, you can only lose up to 100% of your investment, but you can always make way more than 100%. So you're going to be kind of splitting that loss, losing money but making more money than you lose, basically, but also mitigating the risk of like losing a lot of money there. Basically, for MU, if you wanted to do this strategy, we'll look at numbers here in a second. This is more of a numbers thing and fundamentals thing than it really is a technical thing here. But you know, if we have a strong move in the market tomorrow, I would probably have options that for this Friday. There's a fly in here. There you go. What I would normally do is, yeah, 20-day moving average. I'd probably buy options with a strike price of 53 bucks that expire this Friday. And then on the other side of that, as far as puts, I'd probably be buying puts that expire this Friday at $48 to $47. Me being me, I'd probably go 48 bucks, but if you can get it under $1 by going to 47, I'd probably make them move to 47. I don't exactly know how much these calls are going for right now at this very moment in time. Let me hop on over to TD Ameritrade and see if they can actually show me what's going on here. Let me just scan my face very fast. I want to see what these options are, otherwise I won't exactly tell you what options are the best for you to choose here. But it's a big gamble. It's probably going to be coming down here, so just be careful with it. Primarily because you're going to probably see guidance come down as well. But hold on one second. So 30th of September, calls and puts. So a call to the $54 range that we talked about, that's only going to cost you 46 cents right now. So that's $46. Okay. So you can buy one at 46, or, you know, two for 80 or whatever, two for $92, whatever that may be. But you can buy a couple there for under $100. As far as puts are concerned, we just talked about 48 to 47. 48 at this point in time is 54 cents. 47 is 35 cents. Me being a little bit more cheap, I would probably go. They also have a 47 and a half if you like that. I don't like going into halves. There's less liquidity in those markets. For safety, let me see, just say for safety, I'd probably go 48 since it's only 54 cents. If you want to have a little bit cheaper, definitely go with the 47, but I would probably say go with the 48 strike price calls that the put, excuse me, that expire tomorrow, Friday, excuse me. Now, as far as the earnings and stuff like that, oh man, I just got out of FinRiz on accident. I mean, you can just see that general downtrend, can't you? Yeah, okay, growth has been slowing. That's not too bad. Not much bad stuff going over here. Let me see if I can do a little bit of a cheat here. Zacks, Q4 earnings. Let's see what Zacks has to say here. The Boise, Idaho-based semiconductor company posted top and bottom line growth in the last at least double-digit percentage ranges in each of the preceding 4 quarters. However, this trend is not likely to have continued in the to be reported quarter. Let's see. So they're selling, it's, you know, its PC business part is going to be what's suffering because nobody's buying computers right now, which is valid. Everybody's kind of just buying up the graphics card. But let me go over here very fast. I want to see exactly what they're selling, because I'd probably say puts work better, but you still want that call just in case they have good guidance or something weird like that. It's you hedge your bets basically. If you don't want to hedge, go with puts over calls, but I don't feel comfortable just telling you to go with calls or just go with puts. I'm much more of a hedge guy when it comes to earnings reports. I mean, I would probably say puts. I'd probably say puts, honestly. And wait for a drop that would probably be coming down. Yeah, that's what I could see happening from here. If you look at Micron, though, look at the daily chart and just kind of look at it zoomed out. You know, we have hit a relative bottom. Maybe that helps us out a little bit. But unless they have some really golden guidance, it's going to be a rough time ahead for us here. Is this any level of support that we've been saying? No, we never even hit that level again. But yeah, I would say it's a big risk, but I'd probably go puts with it. Earnings are always very, very volatile, but it's a quick, very, very quick way to make money if you can play cards right here, which is usually why I hedge. So I'm not risking as much money, but I'll make some good money, but also not as much as I would have made if I just did one set of options instead of doing the hedging on them. Let's see. Come on, Bitcoin, just make that tall move that we're all hoping for right now. There we are. Okay. And hey, Monica, I appreciate it very, very much. Best 13-month ever. I've learned a lot and I only learn from the best. Thank you. You are very, very welcome. And I hope you're doing very, very well, Monica. And hey, Justin. Oh, what do you call it? My birthday's tomorrow. But I will be streaming tomorrow for around noon time. Probably from like noon to closing. It'll be a shorter day because I have to order a lot of food. I have to go pick up said food. I'm taking Loki out for a long walk. He's going to have a play date with one of his friends. So I'm going to be really busy tomorrow. But I will be streaming with you guys for about an hour, maybe two, probably an hour. And then I'm gonna hang out with the family for dinner and stuff like that, getting sushi. I'm so excited. Their sushi is very, very good, and their sashimi and stuff is really, really good as well. Let's see. And then conscious investing. If I talked more about the markets, not so much about crypto, I think you catch good traction. What do you call it? I agree with that. I'm working on it right now, so I won't be streaming so much about I'm not going to switch up my stream so much because I like crypto stocks. People can ask whatever they want here. However, as far as like update videos and stuff like that, I've been doing less Bitcoin daily update videos because they're not worth my time because nobody watches them. Probably because I haven't made them good enough to be watched, right? There are some people out there like Crypto who have like really wild videos, but people watch that, but it's not really good technicals. It's just entertaining. But I I'm not as entertaining, or I choose not to be, I guess you could say at this point. But what I'm planning with the channel is like, hey, if you go out to a general finance channel out there, my hope here for the next few months is to have videos kind of like this one guy, Andre Jick, I can't pronounce his name properly. But it started the last decade, bonds just crashed, stuff like this. Probably not as dramatic, but I want to get those types of views for making videos. I have to practice my editing even more. There'll probably be anywhere from 5 to 10 minutes. I'm not going to be making them 12, 13 minutes. I don't have the time for that right now. If I get an editor, yes. But I hope to make videos like this, kind of teaching you guys what's going on in the background of the economy, but more data driven than this guy. This guy doesn't really talk too much about data. He's good, but it's not data based. So I'm hoping to do that, but somehow make the data entertaining, maybe with like funny videos on top of it or whatever. I don't know. But yeah, so that's what I'm gonna be doing. So I am making that pivot, but it's a slow. I'm moving the Titanic here from my point of view because I don't have as much time as I thought I would be working on YouTube. I'm about to hit like a conference this Friday, from Friday to Saturday. Next week I have 2 events where I'm talking to blockchain people. After that, I have 1 event where I'm talking with a whole bunch of entrepreneurs and some venture capital guys. I'm blitzing meeting people and networking in Q4 this year, even I guess the end of Q3. So it's gonna be really, really fun. I'm gonna make a lot of new contacts. I got new business cards with my channel logo on them, so that's pretty cool, like some like mythical Bitcoin guide or something on them. But that's just to pass out and get some information. I'm going to be talking to a whole bunch of businesses around the Puget Sound here over the next few months. So I'm getting the back end stuff figured out right now. But yeah, I definitely agree with you there. Crypto is slowly dying out, my man. At least in the short term here. Short term. No, it's right here. In Kyoki, since the pipeline ruptured between Russia and Europe has no gas, I think the US economy will have a good rebound once we start pumping oil again. So it's not oil, it's natural gas. I just got corrected on this and I was wrong. So yeah, it's not it's not oil that needs to be pumped, it's natural gas. The problem with all this right now though is if gas prices keep on getting cheaper and cheaper and cheaper, the oil industry is going to be pumping less and less gas in order to keep prices at a good enough level where they can be making a bunch of profit. That's what they're going to be doing. They're not going to be pumping a whole bunch of oil and add more supply to the market than necessary. They're going to cut back on supply to keep the price in a pretty decent range here. Now, there's only so much they can do because the commodity markets are kind of all over the place right now. However, you've already seen, I think OPEC or OPEC plus, whatever it's called, they've already cut, I think 100,000 barrels a day. Not many, but it's a signal that says, hey, we're getting prepared to cut down on production here pretty soon. OPEC. Let's see. Here's oilprice.com or something like this. But basically, in August, OPEC Plus continued to vastly underperform its collective oil production target, with the gap between the quota and actual output widening to a massive 3.85 million barrels per day. So they're underperforming by 3.58 million barrels of oil per day. That's a lot. So that you can already see they're slowing down. They're not even reaching their targets. They're not even trying to reach their targets. Okay. So just know we're already starting to cut back on the oil supply here. Price should keep on going down as the recessionary fears continue to build with Jerome Powell doing rate hikes, and we'll talk about him in a second, like I told you guys. But it's not as easy as you guys think. Oil companies want to keep on making money. I'm invested in a whole bunch of oil companies right now that have really great dividends because they've been great long-term holds for me, and I love them so much. Like, you can go over here to FinViz, screener, make this nice and easy. I just want a high dividend yield over 5%, and I want it to be in the United States of America. I want the market cap to be over $2 billion. I want the price to be over $10, and I want the industry to be oil. Or let's just go to energy. We can just keep it up. It'd either be refining and marketing or gas drilling, but like we just go to any for now. There's 24 stocks to choose from. Go to basic. You know, ARLP, a dividend of 6%. BSM right here. Blackstone Minerals. This is one of the ones that's going to be on the video I show with you guys later on. That's a dividend of 10.46%. You got CQP. This is at 9%. CQP right here, dividend of 5%. CVI, dividend of 5%. DKL, dividend of 7.63, 7.6, 7.9, 8.28, 8.26. You know, even go to page 3 here. We'll skip page 2. 8.59, 11%, 7%, you know, 5%. These dividends are great if you guys like being paid quarterly. You know, oh, there's the dump. But yeah, I really like dividend plays for this market because I want to put my money into something, but I want to put my money into something that I'm sure that can have a solid rebound. And oil companies always survive, everybody. And you know what oil companies are making a lot of money on in the future? They're investing heavily into green energy. They're going to be owning green energy instead of being like, you know, people call them the oil barons now. They're going to be like the leaf barons in the future. They're just going to own all the green energy sectors. I mean, it's going to be wild. Like when you have grandkids or when I have grandkids or great grandkids, it's going to be so funny to talk about them. Yeah, those greedy leaf barons, they're not paying their taxes, whatever people say about the oil people now, hurting the environment. Yeah, it's going to be crazy. Let's see. What's my take on Doge? You think it can finally push past 7 cents? Yes, only if Bitcoin can manage to make a reversal. Yes, it can have a nice pump. Let's see. And then conscious investing, I do it, but I don't really have the time to do it so much right now. So basically what I do is I just do it for members, and I only give them out like once every month practically. Otherwise it's day trades and stuff like that, and day trades don't have the time to really tell people about my day trades. But what I do basically for the members out there, there's like I can post directly to members, so only members can see the post. So, you know, here, let me see if I can find it. Let me see. I was having COVID at this point in time. Like you see right here, members only option update. Wait, is it? Okay, hold on. We just went with this. Okay, so like here's one. Hey members, on post. I don't know what that meant. I was texting in the car, which probably shouldn't have been. I have 2 hours before I get to my computer from the shop. Oh, I was getting my car fixed up. And yesterday I have and will be loading up on Apple puts on the out of the month, 28 to 35 days out, 145 to 135 strikes expiring on the 16th to the 23rd of September. These have already happened, of course. And then what I do is I'll post a video about it, but then I'll be like, hey, remember those puts those calls I just told you guys about? Oh, puts. These were puts. Sorry, not calls. You know, they're up a little bit. Then I kind of show you guys, hey, the Nvidia is up 19%, Netflix is up 26%, Apple's up 13 and 17%. Then you see how it went up to 45%, 128%, 160%. You know, we kind of work our way through it bit by bit. I mean, this is probably what. Yes, okay. And then I did an update because I think at one point they went negative. I think at one point, not entirely sure. But yeah, so you know, I try to show you guys what's going on with the options plays, but usually only members get to see this because I like to answer questions pretty like a lot when I'm talking about options. But at the end of the day, I ended up selling Netflix for 42%. Apple hit 244%, kind of, you know, mixed in there, 205% for this one, 283% for these calls. Nvidia was up a whopping 1,000%, so I took my profits. But basically I said options update. I usually make videos about this too. Nvidia is having a really bad day, so I've decided to scale 80% of my remaining puts. As always, make sure make your own choices, but no way I can turn down 100% gains. Only Nvidia is in the money. Apple and Netflix are still doing okay, right? So, you know, I give you guys my opinions, but people make their own trades based off of, you know, what their personal risk is. And if you guys know me, you guys know I tend to sell too early. I didn't sell too early as far as Nvidia because I just had a really bad news day, but everything else I sold like a tad too early, but was still very happy with the results overall. Let's see. And hey, Stefan, no, I haven't heard anything on wrapped Ethereum or anything like that. If it is true that it's going to be on a bunch of exchanges here pretty soon, and it might be pretty fun to actually buy some up, and you should be able to make a quick amount of money with it. You know, it's risky, of course. You're probably going to have a nice big pump and dump, but if you guys can buy now before the pump, you guys should be in good shape. Again, probably scale out sooner rather than later. Enjoy the pump. Understand it's a pump, so you don't have to scale it as fast. But you know, I would still be scaling out as the pump actually occurs. If it does get, you know, hey, we're on Robinhood, yada yada yada. And hey, Jack. Oh, any thoughts on not using the wicks on charts? I like the wicks. My data is more precise when I use trend lines based on the wicks and not on the body of the candle itself. So primarily, I do like using wicks. I've tried to do options before by not using the wicks. My friend was trying to show me how to do it, and he has a whole different mindset about trading than I do. When a breakout happens for me on a trend line, or we break above a trend line that has no wick and it's just the body of the candle, usually what ends up happening to me is the trend line is just a tad bit lower, so it feels like a breakout, so you buy it. But then if you actually had the wicks, you'd see the trend line just move up slightly, and what that does is it shows you that's the true resistance. And then all of a sudden that call that I'd be buying for the breakout, it should have been a put because we just got flat out rejected by the real trend line the day after. So it's led to me losing a lot of money in the options markets. I haven't tested it on crypto, so I really don't know. But I haven't tested it on crypto just because it hasn't worked out for me when I trade options. let's see. What are my thoughts on cashing out of the stock market given the current situation in Europe and looming recession, sending money to volatile crypto or safer havens? I'm out of the majority of my stocks. I have been out of the majority of my stocks since April of last year. And again, just like me, I sold early, but I still walked away with a bunch of profit, so I don't care. But I've only been loading up in dividend plays or plays that I want, like I feel like are low enough for me to end up buying some more here at these levels. The majority of my money is kind of just waiting. And my long-term portfolio is just waiting to be spent. I'm okay with leaving it in cash form right now. As far as crypto is concerned, I have a separate pool of money for that. I'm dollar cost averaging every single day, or at least every single week here. I'm happy with how everything's working out with crypto. I think crypto is probably just as safe as the crypto stock market right now. I see both dumping very hard sometime over the next 2 quarters. It's not going to be pretty, but during that massive dump, it's going to be a great opportunity to buy as many calls, or not calls, buy as many stocks and crypto coins you want, and just wait for them to go to the moon over the next few years. But you're buying for a long-term hold here. Even now, you're still buying for a long time away. The majority of my money right now, if you guys know, is just coming from day trading options. Maybe a little bit of crypto every now and again, but not nearly as much, as options. But yeah, it really depends on what you want to do. I'm not saying take everything out of your 401k, get it in cash form. If you're selling your 401k, you're probably just gonna keep it in the 401k account, or your Roth IRAs or whatever you guys have. But yeah, I sold out of so much stuff in April. It was crazy. The market continued to go up after I sold. That was fine. But I'm nibbling into stuff I like. A lot of it's in the energy sector right now. The dividends are really attractive to me. And the reason I'm buying in a dividend plays pretty heavily right now, it's more the fact that what I'm buying are things that I'm going to be holding for another 5, 10, 15 years. So I know that the oil companies are going to be making a lot of money over the next 10, 15 years. So I understand they're going to have a pretty nice trajectory in the long run here. Other companies that have dividends that aren't in the energy sector. So if I go back over here to the screener, I want to go back. I want to keep all that screener settings. Maybe I want to go to consumer cyclical, or probably consumer defensive at this point. I have a total of 3 I can look for here. MO, Altria Group, that's tobacco, NWL, which is Newell Brands. These are high dividend plays. Tobacco may be something I'm interested in. NWL, something I may be interested in. Newell Brands. But this is 6% dividend. This is a 5% dividend. If you want to go to somewhere else, because maybe more options, I don't even know. Healthcare is a good solid play. There's only one though that's good. That has a high dividend here. That's 5%. Most likely you just have a dividend that's over 2%. Should work out. Now you got 16. Yeah. So if you're okay with a 4% dividend, ABBV is a strong play that you guys should consider. I have a bunch of this. AMGN is probably fine as only a 3% dividend, but it's a solid company. Bax, I don't know too much about that. Bax International, no idea. But yeah, so there's opportunities to make money right now. There are stocks that are continuing to go up even when the market's crashing down. But it's the time to be extremely picky. You're not really buying into tech right now. Tech should crash eventually. All the NASDAQ stocks, right? The easy money train isn't here anymore. You just got to be like, hey, I like this company. Oh, let me read the 10K. Oh, okay, they're having strong growth. They see themselves having stronger growth as the healthcare system expands here. I don't know if you guys have noticed over the past 5-6 years, there've been a huge swath of small clinics been popping up all over the place. I don't know exactly what happened, but now all those clinics are collecting tons and tons of insurance money, and the healthcare system has just been booming ever since. So, if you can kind of piece these things together, kind of what you see around you, along with the 10K reports, the quarterly earnings calls, what the company actually does, go to the website, see what services they offer, you can have a really good understanding if you just kind of think about think of this, the chain of money flowing to them and the product moving to the buyer. You can make some pretty well-informed decisions on which stocks you really want to buy. Right now, though, I'm really targeting the dividend plays, and it doesn't have to be a high dividend of over 5%. It could be a 2% dividend because they're companies that I'm planning on holding for a very, very long time. All of my short-term accounts, they're all in cash. I don't worry about those because short-term accounts are just to supply myself with a living here. You know, so day trading, swing trading every now and again, but there's no long-term trades I even have right now in my my personal investment accounts. Besides, there's one, and it's only one. It's Robinhood. The only reason I want to see Robinhood is because I believe that it could get bought out sometime during this market disaster, and I want to see what that price may be. But I have a good average of like $9 right now, so I'm not like, you know, too unhappy here. It's at $10 now. It's up a little bit. The low I experienced was like 690. I was able to kind of buy around those low levels after averaging for a while over here. But yeah, you got to be very, very picky. But again, you know, look at the revenue. They're just hemorrhaging money. You go over here to Coinbase. They're hemorrhaging money too. And Coinbase right now has to deal with a whole bunch of circumstances as far as people are getting fed up with paying the fees. The fees that Coinbase charges is absolutely astronomical. I don't think people will ever understand how many, like, why the fees are so expensive. They're incredibly expensive just to transfer money. Nobody should be paying for such high fees. Nobody. But they got away with it. They somehow managed to make it work. But guys, eventually Coinbase is most likely going to die out. However, there's an opportunity for it to have a massive breakout pretty soon, which I would love to see. So short term, look at Coinbase, guys. Some calls at the $100 strike price for like a month and a half away or a month away. Probably going to have some good fun there, especially if Bitcoin manages to pop. So I'm watching it pretty closely. Hopefully we can have a pop. If not, that would suck. But Coinbase is ready to go. But long term, Coinbase is going to have to change their entire the model because they're burning through so much cash. Even when the market isn't, you know, pumping up. Even when the market is pumping up, it's just a very expensive business. You'd want to see some great margins. I don't know what the margins are for Coinbase though. The margins have been going down here. Gross margin 80%. That's actually not too bad. They've been burning so much cash. But you would have to go to their 10K report and see what's going on. I mean, oh gosh, it's just going to be so crazy with Coinbase over the next decade. Let's see. Hey, H-Rod, how come people can't get financial advice? It basically just opens us up to legal litigation. Like, hey, Michael, I want to buy. Like, they can say, hey, what should I buy? And I tell you, hey, I buy this, this, and this. If you lose money, you could try to sue me. Now, you'd most likely lose in court, but me just putting that down or us just saying that on our descriptions means that we can show a judge then, like, okay, well, this case is dismissed then. You know, it would just simplify the process a lot more for us. If anybody was like crazy enough to try to sue, I've never been sued. I don't really care, but you know, it'd be really annoying, I guess you would say, right? And then Monica, Netflix puts anytime soon, NVTA is possible. I would say for Netflix, only if you really see a good breakdown happening. I haven't looked at Netflix in a minute here. What did I mess up here? There you go. All right. It just broke above its 20-week moving average. It's been hugging that pretty closely. I mean, I'd be careful if we do have a bounce as far as the NASDAQ is concerned. Let me put a minute on this very fast. And we break above 251.99, so like 252. You could have a pretty sizable move back up to at least 292, which, I mean, when's that last level of resistance? Yeah, like 294, 292 level. That could demolish a lot of shorts out there. So if you were to do it, you're probably going to be doing a day trade as we hit the resistance and then kind of wait to see if we start coming back down. So close to having a potential bounce here. This is a put buying zone or a shorting zone or a selling zone if you want to take it. But at this point, I'm paying more attention to the overall NASDAQ than I am with just the like each individual stock here. Day trading, this is going to be something fun. You guys are really going to like to trade. Options aren't too expensive. I would just say be cautious though, because if we really start chugging up and breaking above this level, you could see some monster moves, especially as we run up towards earnings in a couple weeks. That could be a big catalyst for Netflix to try to have a pump up here. I don't know if they're going to have blockbuster earnings. You guys remember over here we had some puts. Those made a lot of money off of Netflix earnings. but those puts, this earnings was actually pretty good. This earnings, who knows? I'd actually love to play the earnings here. It'd be a good YOLO play for me. Come on, Bitcoin, please make a surge. Please don't. We didn't break that low, did we? No. Okay. Yeah, let's hope we can stay above it at this point in time. And hey, Chef, Tesla calls? I don't know. I mean, yes, because of a bounce here, but let me see. Do we actually have a breakout? The golden cross was the signal, my man. Got a nice little channel here, kind of mixes up with this over here. That's fine. So you're kind of in no man's land, which I normally don't like to buy around. However, I mean, we're really close to just having two golden crosses right here, which look like they're going to happen anyway. So what I'd be probably looking at is Tesla calls between 300 and 310 expiring 3 weeks out, and just kind of waiting to see how this plays out. Personally, because of how choppy the market is, I'd only want to be in here for at most like 2 weeks. So I would say if you can get some options that expire the 14th of October, somewhere around 300 to 310 strike price, maybe 310, so you can, you know, save a little bit of money on the options, with risking a little bit of theta exposure there as well. You know, I would like to probably just hold these for like 4 or 5 days at max and just be really just take the profit as it accumulates around 312. Now, if something really good happens and Tesla breaks out above this, you know, you could definitely make a run up here at 362. I mean, it's gonna be hard, but it could definitely make a run at least up to like the 330s or so. But you know, if we hit the 313 level, that resistance level up here, I'd be like at least 50 to 60% out of my calls at that point in time. Let me see if there's any trend-based fibs I can look at that have been like actually honored by Tesla. It's okay. Yeah, there you go. So actually found some support around here. We just broke over that resistance right there. Okay. Yeah, that kind of adds to my determination. I'd be like 50% out of my calls at that point. Afterwards, that next big level is all the way up here at 396. I don't think Tesla's going to reach all-time highs again here. Not in this current market environment, but it has made a very strong recovery. I would like it to see it to get back up to 313. So any options kind of around, any calls around that 310 strike price, expiring over the next 2 weeks, I think they're solid plays. Next 2 or 3 weeks, but I'd probably say 2 weeks is going to be fine. Golden cross is coming. Tesla hasn't had a golden cross, and was the 50? There you go. Since over here, and that led to a nice move. Hopefully that leads us to a nice little breakout as well. You know, 315, scale out a little bit. After that, I mean, 350s, I think it's a possibility, just because Tesla, if we go over here very fast, from the lows, Tesla ran up about, you know, 52%. It's a pretty fantastic move. So, you know, plus we've had a split in that time frame as well, but you know, there's an opportunity here. Stop loss probably going to be around the 265 level, so you're going to be risking a good chunk of that cash there, but you're hoping that the market can continue to bounce here. These golden crosses really make me excited to see where Tesla can go. I'll buy some calls and I'll see where they go with you. I'll probably buy them tomorrow since I missed out on them today. It only went up like 2% today. Not too bad. See, the dogs of the Dow are all dividend plays. I mean, dude, dividends are great. People don't like dividend plays too much, but they're really freaking fantastic. And Chef, let me know if you have any more questions about the Tesla calls as well. Did I hear about Lucky Experience on YouTube? He will charge you $1,500 per person. He will teach you how to win jackpot on YouTube. Is that illegal business while he's running a casino? I mean, it's probably not allowed on YouTube, honestly. His channel probably will get banned eventually. I don't know, but I don't really know much about gambling in terms of what you can do on YouTube and what you can't. I like playing blackjack, poker, slots, roulette. That's about it. But there's a lot of slots. There's a lot of different types of roulette. So, but I like to go gambling at casinos. But I usually walk in with a stack of like bills. That's probably anywhere from like $500 on average for the night. And when I'm done with that, when I lose it, I'm usually walk out, or I usually actually end up walking over some money because I win a little bit of a mini jackpot, and I just like put ones in for the rest of the day trying to win another jackpot on slot or something like that. I can be really cheap when it comes to the to casinos. The only time I don't really skimp is when it comes to tipping the people behind the desk, because like they make it, you know, it's their job to make that tips, or they get paid well in tips, I guess. NA Jack, hope tech doesn't crash. I have stock options on Amazon. I work for them too. What do you call, if the market really goes down for Amazon, you're probably going to get some type of support from Amazon for that. Because what happens is if those options end up like, you know, divesting or closing out of the money, usually the corporation who made them will usually find another way to compensate you with the same amount of options there. You know, this isn't Amazon's first bear market. It's not going to be its last bear market. They've worked this stuff out. Options can be kind of tricky, of course, but hopefully it's not going to be too rough for you there. NA Round Earth, why would anybody ever use Coinbase when you can use FTX or Gemini? Dude, don't ask me why. People do. I don't know. People do. My man, people do. There's probably some people like Gemini better, or some type of people FTX or Coinbase. I don't know why, but lots of people like use Coinbase. My point was that Coinbase's fees are so crazy expensive that as people try out new apps during this bear market, even going into the next bull market, you're going to see that they have they start, you know, losing the long-term clients because the fees are just too much. I mean, they're too much. If you're paying 2% or something like that for a transfer, that adds up really fast. If you guys are trading 2%, 2%, 2%, 2%, 2%, it just kills your day trading power. It just annihilates it. Which is why, you know, most people go to the BitGets, the Femexes, whatever, you know, Bybits, the Binances, KuCoin. There's just so many exchanges, the Geminis, the Krakens, like you said. There's a reason why people kind of migrated away from Coinbase. They're going Robinhood, still find a way to be free. Robinhood needs to have as many coins as Coinbase does, but make it free. I mean, the crazy thing about Coinbase, now they're not going to do it because I don't think they have the cash flow for it, but their market cap is $15 billion. Robinhood's market cap is $9 billion. Both of those are prime targets to be taken over. But although I do see that Robinhood is probably the better acquisition to me at this point in time, because I don't know how you fix Coinbase. Like, I don't know what they're spending all their money on. I don't know what the excess capital is. Like here, relations, Coinbase investor relations. Oh, no. Okay, hold on. Ah, there we go. Okay. Doesn't even tell you the name of them. Oh, no, maybe it does. Okay, hold on. We got 10Q, now 8K. There we go, 10K. Okay, so this was released in February. Let's open the PDF here very fast. Now this is a total of 227 pages, so we're not going to be looking at all of it, but what we have to do is just go over here and let's find financial statements. Accounting firm, that's fine. Balance sheets. The custodial funds due to customers, preferred stock, of operations, technology and development. Why does that take billions of dollars for technology and development? Marketing, that's not too bad. General administration, that's not too bad. Restructuring, that doesn't seem too bad. This technology and development, I would have to dive deeper into what that actually means. Net income loss attributable to common stockholders. Jesus. That's $3 billion. Taxes, yeah, and they pay hardly any taxes. Yeah, I don't. Convertible, so this is preferred stock. We don't care about preferred stock. Cash flows. Short-term borrowing, insurance of senior notes. They have investments themselves that are making money on. Exercise of warrants, not too bad. End of period, that's fine. Yeah, I mean, I'm not going to go over all this with you guys. I mean, I can really dive deep into those numbers, but yeah, I don't know what all that technology cost is. You know, wherever that money is going, it seems like they're just burning through it at that point in time. Sorry to go silent for a second, but that just seemed weird. But again, you can read about it. You can kind of do a deep dive. I don't know why those expenses are so high. If they can kind of figure out those expenses, I'm pretty sure they can lower their fees, make more money, keep people happy. I like Coinbase's app. It looks nice. You get paid to, like, you know, learn more about the cryptoverse and the crypto, you know, cryptoverse. It's a really cool concept. It just seems that, like, they're being very greedy when they don't have to be. Would I consider doing a live stream at a casino so we can watch you play at a casino? Probably not, because YouTube kind of like blocks those streams off as their own thing. So basically what it means is, like, I would have a hard time finding a lot of other viewers. There are certain niches on YouTube where, like, there's a clear wall between, like, certain people. It'll show certain people the videos and, like, the whole wide world of video. And by that, I mean, like, hunting videos where there's, like, actually, like, you know, gore and stuff like that. Shooting videos, a lot of those are blocked off. Casino videos kind of fit into that range. Drinking videos, smoking videos, rolling up, you know, joints and stuff like that. Those all kind of get blocked off by YouTube's algorithm. So I don't want to test that algorithm at all. You know, YouTube's algorithm has not liked me in the past. It tried to cancel my channel. And hey, Chef, how do I look at more options in Ameritrade right now? It just shows me like 5 above and below the current price to buy. I'm using the iPhone. Are you using your phone? So I haven't had to change my stuff up in a while, so just let me see what I can do for you very fast. So like, I have tons of options I can see, tons and tons of options I can see. This is for Micron, and you can see like all the different expiration dates right there. For me, I would assume you'd go over here to this gear in the middle. I don't know. It's not going to zoom in properly. Hold on. See that gear right there? I would tap on that. And then, oh no, this tells you the visible columns. Oh gosh, I don't know, my man. Options. I think I changed mine through TD Ameritrade. Oh, sorry guys, it's all blurry again. I think I changed mine through TD Ameritrade. So I'm not entirely sure, but I would have to assume there's a way to do it on the app. Maybe if I go over here to more, I go over here to settings, and I go over to down, scroll down. Default, theme, dark. Overview. Watch list. You might have to Google it, my man. I have no idea what I did to get all these up here. I changed it in my TD Ameritrade account. That's the best I can give you, like on the actual Thinkorswim application that's downloaded on my computer. That's how I did it. I would think you should be able to do it with the settings, but it looks like the settings are just telling you what the information you can see about the actual options themselves, like mark, net change, open, option code, implied volatility, open interest, stuff like that. There has to be a way to do that though, because I see every option that's available to be bought, like every single one. Oh, okay, I found it. Sorry, I found it. Okay, so let me go back again. Sorry, guys. Gosh, okay, there we go. Let me zoom in a little bit more. Okay, you can see that perfectly clear. Okay. You see this in the middle where it says strikes? Make it all. Oh God, this is not me. Okay, see? You probably have it set to 6 strikes or 4 strikes. Have it set to all strikes and you should be perfectly good. Okay, somebody probably told you that in the comment section while I was ranting about all that type of stuff. But yeah, it seems like that's the way to do it here. There we go. Okay. Feels weird to have the camera out of focus here, but I have it set to manual so I can tweak it a little bit. I can set it to auto, but then I have to get my phone connected to it. Okay, there we go. Hopefully that helped, man. If FTX had US had a limited coin choice, Coinbase Pro has a lot of choices and user friendly. People in Texas and New York don't have many other options. Yeah, exactly, right? So if it's what you got, it's what you got to use. It just makes it harder to trade. And I think they just shut down Coinbase 1 too, which kind of sucks. I know it's Jack, happy to help you out, my man. I'm hedging from stock to crypto in all honesty, but can't see whether the winter is coming or a bull run. No magic ball, of course, but smart play. My perspective is we're going to have a crash. And before I go into this crash reason, let me answer Probin's question very fast. Thanks for the super chat, man. Can I do TDA on KDA? Yeah. So KDA is definitely a big risk right now, but it seems like it'd be a decent long-term hold just based on what they've been up to. So let me go over here to the daily chart. So just like a lot of other coins, it's at that buying zone right now. So if you wanted to buy, go for it. Have a pretty like 5-10% stop loss. That's what you're going to be looking for. I would just say be careful because it kind of opened up more recently. So I don't even know if this chart matters as much. There might be another KDA here pretty soon. KuCoin, more information. There we go. There we go. Okay. So, you know, let me go to the weekly chart. You can see this clear level of support that we're looking at here. If we break down below this, there's a really strong chance the 20-week moving average crushes us all the way back down here to like 87 cents for a drop of about, you know, 54% or so. So just be very, very careful if you're getting into KDA. As far as the swing on the upside, what I'd be looking for here is just a basic Fibonacci extension. And I'd be hoping that this is the bottom over here on $1.31. From there, you're going to want to see us over the next few days if we get a rebound from Bitcoin and NASDAQ. I would really just want to see it get up to 164. 164, I'd be very happy to sell. It had a very good rally last time, so maybe it'll have something similar. For example, this low to high right here is 81%. Maybe it has something similar, but I would really start scaling around $1.65, $1.64. And then, you know, maybe I have some positions left over for $1.89 all the way up here to 237. But, you know, I'd really start scaling out right around here, $1.65. Another one right here, just every single resistance level we have from the Fibonacci extension, I'm scaling out of those. But you know, it's just a big be careful, because if whenever Bitcoin does crash, this thing is going to crash like 50% in like a matter of like a week or so. So it's going to be very, very bad when it does happen. Now, basically, let's see. Oh, talking about the stock market and the crash and everything like this. Here's my thoughts. It has mostly to do with Jerome Powell, and to understand this, you guys have to understand how we got in this position, the good, the bad, the politics of it, all this stuff. Okay, how this all started was majority of it was COVID, guys. COVID disrupted the supply chains. A lot of truckers lost their jobs at first. A lot of them decided not to go back into the field. There was massive hiring. A lot of the supply, like warehouses, a lot of these jobs, because we had such a hot job market, a lot of these jobs couldn't be filled, along with COVID and all the other stuff going on. Now that was part of it right there. Okay, that added to a little bit of inflation. Biden came into office and, you know, he's a pro climate change guy, green energy, yada, yada, yada. He's not a friend of the oil corporations. And usually what oil corporations do, energy corporations, whatever you want to call them, when they sense a hostile administration, they keep on making money, of course, but they don't invest because they're afraid of lawsuits that are going to come from the government. These oil companies have millions of, or maybe not millions, but they have like tens of thousands of permits all across the United States where they can drill. Okay, but in order to actually drill, they got to go review the land. They got to go see how it's going to affect the ecology, whatever it is, you know, the environment around it. They have to get through the court system. They got to make sure there's no lawsuits against them saying this is going to blah blah blah, this is going to hurt the environment, this is going to hurt the fish, yada yada, right? And they tend to just not go through that process as much when they have a Democratic administration, because there's wind facing them, whereas in a Republican administration, there's like, say the wind is at their back, right? What, you know, and what ended up happening there is because of some of this stuff, you know, supply chain issues, refineries not being at full capacity, you know, the slumbering giant that is the energy sector was still kind of slumbering here a little bit because, again, take a look at oil prices and commodities. Oh my God. Oil prices literally went to negative numbers. I mean, like, we still can't even look at a weekly chart in auto because of that, because we just flat out crashed and went to negative territory, which is kind of like the scariest thing you could ever see, right? Now, during that time, oil prices were going back to consolidating. Everything was kind of fine. You can see right here, you know, Joe Biden won in 2020. We go over here to when Joe Biden took over in January. And kind of right off the bat, actually, you can see how we just started ticking up again and again. You know, could oil companies have done something? Probably. Did they want to take the risk? No, right? And that kind of just goes on to how they feel as corporations, whether you like it or hate it. That's kind of what happened there. Now, you know, what happened when gas prices kept on going higher and higher, the cost to move goods across the world, whether it be from China to America, from Wisconsin cheese to my table, that whole process got more expensive, which caused the price of goods to go up more and more, which caused inflation to start going up. Now, at that point in time, what was going on? Biden was trying to figure out if he wanted to choose Jerome Powell as his next, to continue on his job as Fed chairman, or if he wanted to fire him and put somebody new that maybe he liked that was better. All right. So what happened during this time frame, which was very, very interesting, is inflation was starting to get talked about in the news a bit more. But you had Secretary Yellen come out and say, "We believe this is transitory. This is not going to take a long time." Biden kind of mimicked that message, and then what did Jerome Powell do? Because he wanted to keep his job, he followed the politics. Remember, guys, bankers are very political savvy people. They know what they're doing, and so he said, "Hey, I'm going to side with Biden here. It's transitory. It's not going to be that bad." And you had tons of voices out there. They kind of got drowned out, of course, but there was voices out there that said, "Hey, this is not going to be transitory." Now they're seen as very, very smart people. But if you kind of look at the data back then, you can kind of understand how this wasn't going to be transitory. But, you know, let's move on. So we all believed in transitory. Because we believed in transitory, because Jerome Powell didn't want to freak anybody out, he was not raising rates. He was like, "We're going to be fine. We're going to be fine. We're still recovering from COVID. We're going to be fine." Now, again, continue to move on here. All of a sudden, for some reason, out of nowhere, they're like, "Oh my gosh, this isn't actually transitory. This is some real bad inflation, and it's going up hotter and hotter and hotter. Oh my gosh, up to 9% inflation." So what had to happen then is Jerome Powell had to say, "This is not transitory." All of their credibility took a hit. Joe Biden's credibility took a big hit, not as much as everybody else's because he's not an economics guy. Janet Yellen, huge hit to her reputation, huge hit to her credibility. Jerome Powell, people mock him to this day because of how idiotic he was. Now, he's been raising interest rates hikes, you know, quite a bit. At first it was 25, then we moved to 50, then we started moving to 75, and we just had a 75 last month, right? Or this month. Now, the problem with all of this, which is kind of leading to this crash that we're going to see, is there was a very long lagging effect of raising interest rates. We barely even realized that the effect of the first interest rate hikes that happened like months ago. We barely felt those yet, guys. It usually takes anywhere from like 6 months to a year to feel the pain of an interest rate hike, the slowdown that it really incurs. We've seen a little bit in the housing market, a little bit in some of the other markets here, but the economy itself hasn't really felt the effects of it just yet. We're feeling the effects of the fear of happening, right? Based off of what the stock market is telling us. Remember, the stock market's always like preceding what's going to happen or guessing what's going to happen in the future here. So, I mean, let me see if I can just find this for you guys. Lagging effect of monetary policy. Yeah, interest rates. There you go. Hey, economicshelp.org. That's even worse than I thought, actually. So close and accept all. So let me see. Okay, forward-looking monetary policy. Time lags can make policy decisions more difficult. It is estimated interest rate changes take up to 18 months to have the full effect. This means monetary policy needs to try and predict the state of the economy for up to 18 months ahead, but this can be difficult in practice. Now, you can obviously see there's some math in here. I'm not even going to try to go into the math here. Reminds me of freaking college, and I did not like college at all, besides the drinking, I guess. But my point here being is, we haven't felt the effects of the interest rate hikes yet, guys. I mean, when we start feeling them, which is going to probably happen in 2023, which is why everybody's saying 2023 is going to be the bad year. I mean, there's no way. I mean, like, personally, I just don't see a way where we can pump our way out of that, basically. Even with the war in Russia, if it ends or whatever, which it doesn't look like it's going to end anytime soon with that 300,000 people getting drafted, you know, that to me is the major reason. You guys hear me talk about it all the time where I just don't see the economy looking in good shape right now. Imagine when the hikes actually have their full effect. And, you know, so I don't think people understand there's a large lag that comes with raising interest rates. And, you know, let's see. I don't know if I can find it for the maybe this one. I guess that was at the top a few seconds ago. What I want to see is a calendar of the rate hikes we've seen this year so far, but I just don't think I'm probably going to find it in a fast enough so this is what's from July, I guess. So that means 5 times, so probably at 6 times. They've raised them about 6 times, I guess. And that really started off in, I guess we didn't have a rate hike in August. So we have September, July, June, May, April, March, I guess is probably when all this stuff started off, maybe. So if we started in March, so that's March, April, May, June, July, August, September, we're like 7 months into this. I mean, we've only seen the small effects of the interest rate hike so far. That's the big concern. Sorry guys, I had to do some basic math here and it wasn't too pretty, but you know, that's why I'm so bearish in the long term here, you know, more longer term going into 2023 for a lot of assets. Now, because of the NASDAQ and the way the market kind of moves and how we really don't have much bad news at this point in time, of course, you guys know I'm like in that. I'm pretty happy to be longing right now with Bitcoin for some leverage positions, or as it comes to the NASDAQ, because I want to see us bounce off of the 200 weekly moving average, which historically is a very, very strong move, because whenever we come into contact with it, which we don't do at all, rarely, right? We've only been happened 2 times since the year 2000, 2 times. We have a solid bounce off of it before ultimately making a very, very large crash. And remember, guys, when we were crashing here, they were lowering rates, not raising them, because we didn't have to deal with high inflation. So that's what makes this even worse. But, you know, every time we come into contact with it, we bounce. And then, you know, the only time it hadn't come and we didn't bounce off it was all the way over here in 1990, before computers were heavily used in trading. So you know, with all the algorithms and stuff today, I really count that as like, I don't really care about it too much here. But more, you know, in the computer age, the digital age, we break down below this yellow line, we're screwed. You know, I mean, we're in different times, of course. We kind of have high inflation, so maybe it changes a little bit. But, you know, from a historical aspect, this is something that, you know, it's a big, massive flag or warning signal saying, hey, if we break down below it, really bad stuff happens. Although I don't think we're at that breaking down point right now. My gut, or just, you know, my personal feelings about the market is we're kind of more here looking for a bounce before we eventually crash. That bounce may take somewhere, you know, between like what, 41 days, which it took here, or it may be more like 2008, which took months and months and months, in which this circumstance, before we crashed, we bounced for about 182 days. The real bounce occurred, I guess, after only 63 days of having some nice profits. But, you know, yeah, you know, the historical context for a lot of this stuff doesn't look as nice as we would want it to be. And plus, you add on the lagging rate hikes, I just see the market getting a lot worse when I wish it'd be getting better here. But I'm not gonna, you know, there's nowhere I can force the market to do something. I'm just preparing to buy at some really good cheap levels for the long run here. And hey, Christine, Texas KuCoin user there you go. I like KuCoin quite a bit. And hey, Chef, so you're waiting till tomorrow to decide to take some calls on Apple, Mike? Yeah, either tomorrow or Friday. I would probably open up a small opening position for Apple and really double down on it on Friday when I can kind of see which way the winds are blowing. I think by tomorrow we'll also know what's happening with the hurricane, how bad it is. I can kind of make more of an informed decision there. But I would most likely be doing calls rather than shorts right now, or puts. Only caveat to that is just be careful if you guys are going to be doing earnings. Earnings are a totally different basket of themselves. There's probably not so many earnings coming up next week, or this week, but they should be starting to rotate a little bit more in here during October. Yeah, and Chef, if you want to see the breakout I'm looking for, just go to the 4-hour chart. You'll see that trend line poking out right there in front of you. And they can AUY Yamaha Gold. It's going to be hard to trade options on this because it's so cheap. That's going to be a problem for you here. As long as there's liquidity in the market, so like tomorrow, look at the option set and see how many trades are being done. What TD Ameritrade, you see a flash, you know, the little flashes, the little ticker changes and stuff like that. You want to be seeing a lot of option flow data. If you're on TD Ameritrade, you can scroll down and if you're on the application, you should be able to see like every single trade being done through the TD Ameritrade network on that particular thing. You want to see a consistent amount of flow being down there. Okay. Now, as far as Yamaha Gold, it's had a little bit of a spike. I would like to buy it, particularly if it actually managed to have a breakout here. That'd be amazing. At this point in time, it's kind of in that neutral zone where I don't usually buy up too many plays here, because I usually like to buy at support levels or resistance levels. Let me see if I can actually pop this up right here, if there's any extra support levels though. Did that hold up at least on a weekly chart? No, it didn't even hold up on a weekly chart here. Yeah, I guess it worked. Well, actually, it worked here, it worked here, it worked here, it worked there, and it worked here temporarily. Okay, so it did work out a little bit. We just kept on falling down, unfortunately. So what I'd be looking at right now, if it could break out above 480, 490, I'd be happy to buy up some calls. Until then, I might be more inclined to just day trade this sucker. If it comes back down, perhaps, let me go to the 4-hour chart. If it can come back down towards like maybe 430 or so, I think I'd be happy to buy it. Otherwise, if you're going to buy this, you'd probably just want to buy the $5 calls expiring in 2 weeks time and just hold them. You probably won't have to worry too much if it falls back down to 420 or 430, whatever. Probably just to buy, if you're, if you want to get into this, buy whatever price it is now, hold on for a couple weeks and see if it gets back up to $5. If it gets to $5, you're going to be shaving off this, probably somewhere around 470, then shaving off some more at 488, then shaving off some more around 5 to 520 or so. It's an okay play. With the market bouncing, it should do okay. Just be careful of any reversals that might happen when it comes to this Fibonacci resistance level or support level here, retracement level, excuse me. And then what happens to the trend line. I would say I would feel more confident about buying this next week, but by then the price might actually be a little bit higher and away from the breakout there. I'm hoping that we can stabilize at least until maybe Monday or Tuesday. You can see some of these moving averages on the 4-hour chart actually continue to slow down just enough that we actually look for a golden cross opportunity where it can pop up to maybe 520 at the max, maybe higher than that. We'll see. But I think 520 would be perfectly fine for me as a price target here. If you're buying around the 440 level, you're probably not going to hit that level. But as it kind of gets higher and higher, you should see your options do pretty well. And your strike price will probably be around $5. So it could finish up in the money, which would make your life a lot easier when it comes to selling off the asset. But make sure there's a lot of volatility. You want to see some liquidity in it. You don't want to buy it and have trouble selling it. Although with the Yamaha Gold, I think they're okay as far as liquidity is concerned, but double check me there. I haven't traded in like months. There you go. And hey, Christine, thank you. I can't wait for my birthday tomorrow, guys. I'm just gonna be so nice. I'm gonna be smashing down sushi. It's gonna be great. Let's see. We still can't even look at the weekly chart in auto. They're gonna get better. They're gonna get better. They just need to get some. They need to get some like visionary people in there that know how to code. Their tech team needs some help there. And hey, Tony, it's pretty bad down here in South Florida, Michael. Hope we're doing well at Central Florida. Yeah, we were looking at the hurricane tracker right now, and it's definitely like almost directly in Central Florida right now. I don't know if you're by Lakeland or Melbourne, Palm Bay, or Orlando, but I can definitely see this thing slowly moving across. And the thing has been very, very slow. But you can see the path it's supposed to take, I guess. How do I get out of this? There we go. I don't care about all the windy stuff. You guys can see that's going to be bad. But you can see all the storm surges and stuff. The Port Charlotte. Looks like the storm surge. Oh, I don't even know how bad it got. But I saw the videos and it looks like it's really, really bad down there. So like cars being swept away. Really nice cars being swept away. Really bad cars being swept away. All those cars are just going to end up being in the ocean if the receding waters are too strong for them to, you know, for the weight to just keep them down. It's always funny to think that cars float though. But yeah, a lot of storm surge over here, guys. Hopefully it ends up passing over very quickly, but it still seems like it's going very, very, very slow at this point in time. But yeah, be careful, my man. And I'm happy you still have power. I heard like over 1 million people don't have power right now. I'm glad you're one of the people that do. And hey, Jack, why a call on Apple hasn't the iPhone sales been disappointing? It's all based off of technicals, If the market pumps up, Apple will pump up as well. Apple has been holding up very, very, very well as far as the market's been concerned, like way too well. So I'll buy puts on it eventually. Remember, guys, the 280% or whatever, the 240% profit we made on Apple was on puts the last time around. So we're not afraid of buying puts. But what I'm hoping for here, this is the 4-hour chart. I'd like to see a breakout occur right over here over the next few days. Or if you want to go over here, you know, switch it around a little bit, see a breakout just, you know, above the 153 level is what I'm looking for. And I'd be happy to kind of buy some up. Excuse me. I'm much more of a breakout guy. You guys know that. But let me get rid of all this stuff. If I go over here to the monthly chart, I mean, look how good this is doing compared to a whole bunch of other charts now. Like, let me go over to my YouTube breakouts. When you look at Netflix compared to like this is all-time highs for Apple. All-time highs for Apple. Look at where it's at. It's barely off those all-time highs. You know, you see Netflix, it's in the tank. Tesla doing okay. Microsoft doing okay, but looking like it wants to plummet here pretty soon. LHX still doing okay. HD a little bit down more. Lowe's down quite a bit. Intel, jeez. Intel, yeah. Apple will eventually do this, in my opinion. It's going to take some time for it to happen, though. My gosh, this is a monthly chart, of course, so this took months to happen, but I guess they're just used to coming down quite hard in bad market environments. That's kind of shocking. Bank of America, there's, you know, we're still at some pretty high levels, guys. JP Morgan down a little bit. Visa, oh, banks are great for long-term holds if you guys like them. Same with Visa here. Visa is great. MasterCard's great. Visa just broke down below its 50-month moving average for the first time ever. That's interesting. MasterCard here as well. MasterCard has not been performing as well as Visa. Visa is king, it always will be. But you're looking close to a big dump here pretty soon as well. Oh, so this is Macy's, not my bad. MasterCard. MasterCard's doing okay. I still like Visa better though. Oh, but it also broke down below its 50-month moving average here. CVX. Okay, this is oil. You can see why I like oil, guys. I mean, I've been ranting about oil for a while. This is CVS, not oil. ZOM, oil, beautiful, beautiful, beautiful. PXD, oil again, very, very beautiful. COP, right? Oh, and if you guys like stuff like CVX and stuff like that, this is a Chevron Corporation. Go look at it on finviz.com. And like you can go through the earnings, but they do have a 4% dividend here, which is actually pretty solid because they really do have really good growth for them for themselves. But you can go with, you know, PXD, Pioneer Natural Resource Company. This is a great one. COP, really good one right there. Oxy, really, really good one as well. Had a major crash, had a double bottom, and we managed to bounce back up, but that was crazy. Devon Energy, a wild card in my opinion, but this one has room to run up to $100 even in the bear market. It's pretty interesting. SLB, doing okay. I wanted to buy it under 20 bucks if I can, but I don't know if I'm gonna get the opportunity here. On the monthly chart, it's having a golden cross, which is kind of like, don't have that golden cross because I want to buy you cheap. But on the weekly chart, just had 2 golden crosses there. I want to see where this goes, but oil prices really do drive this one at this point in time. As they're slowing down, as they're not falling down as much, maybe that helps us out a little bit as far as these oil plays are concerned. But you know, Google's fallen down a lot more because their advertising bucks involved. Facebook down a lot more because advertising bucks are involved. Apple, they make phones. They don't really have to worry too much about advertising. They're in a pretty good spot. They will crash eventually. According to this, that will probably happen in like November, really? December? Yeah. December, like, you know, towards the end of the year, we might get a little bit more bumpy. We might even actually do okay. Choppier, I guess you would say. Next year, when you actually have the opportunity for these weekly death crosses to start moving down, that's going to happen sometime in like February, March. When's the last time we had a death cross here? 2000? 2000. Yeah, wow. Not even in the financial crisis did we have the 2 death crosses. We had the 20, but not the 50. Yeah, we're going to have both of these most likely crossing down below this 200. And not because these are going to move down so fast. The 200 is just moving up so fast that there's no way with this sideways consolidation that they're going to be able to stay above it unless Apple really tears up to like $250 over the next few months. But yeah, it's all technical. It's all technical right now. Fundamentals, I'm going to worry more about that information when it comes down to November 3rd and we have Apple earnings. Right now, I would like to see some type of bounce in the short term, kind of going off of what we've been seeing from the NASDAQ itself. Still a risky play, but you can kind of see a trend line right here. We're trying to play that bounce right there, basically. And a lot of people will play that bounce actually today after we opened up lower after that news of slower production, and that ended up making them some good profit, which is great. There you go. And then Michael, futures are red. Yeah, I mean, everybody's probably forgetting about the hurricane. They're not too bad though. We're like down 0.33 for NASDAQ, down 0.19 for the S&P, and down 0.18 for the Dow. We can get out of this, but we can get out of that by morning time, I would assume. Not too bad. Let's see. And Michael, I'd rather buy debt-free companies since rates going up will hurt many companies' earnings. Oh yeah, it's going to hurt them quite a bit. That's why I assume we're going to have a really bad market event pretty soon. You know, sometime over the next few months here. But let me see. What I'm going for is strong cash flow. I'm okay if they have a little bit of debt, but if they have a strong earnings report, like they have money coming in, aka oil companies. That's why I love them so much. They have money, guys. Even if they're losing money or whatever, not even if their oil is cheap, they are still pouring out money, and I mean pouring out money. They have so much money, it's incredible. But that's why they pay their members for the most part so well. Watch out for companies that transport oil. You want the ones that refine oil and produce oil, like drill oil. Okay, that's one caveat for the oil industry there. it's fine if you go with them, I guess, but it's just, you know, you want to wait for them to crash before you buy into them. It's more of a timing thing. But yeah, debt-free companies that have a lot of cash flow, the best thing you can do, be careful, because I think during this upcoming market, you're going to see a lot of companies actually use some of that free cash flow to scoop up a lot of low market cap companies, and there's going to be a great big wave of people trying to buy up all the small companies. Whether the Justice Department tries to sue everybody, probably, but I don't think they're going to win a lot of those lawsuits there. And hey, Cape Cod, why do I think Apple's going to go down like that? You are the second person I've heard say that. Oh, and you heard somebody else said it predicted under $100. It's way too overvalued. I'm basing it on the whole market crashing in totality. Like, so S&P, Dow, NASDAQ, Apple, Microsoft, Netflix, all of it going down like 40, 50%, huge, massive drops over some time during next year. Maybe some companies that have good cash flow only drop 30%, like 40%. But you're going to see a lot of companies, in my opinion, get hit very, very hard next year, just get annihilated. And Apple just happens to be one of those. I mean, guys, what they sell Apple, what the majority of the money comes from is the production of products like MacBooks, Apple TVs, Apple One, you know, the streaming service, and then phones, you know. If the recession is like very not terrible, but just moderate, people aren't going to be buying the newest phone. You know, people aren't going to be buying the newest MacBook. They're just not going to have the money for it. And right now, Apple's already going to have some trouble with their computer business because, you know, Windows people like me, we can build a computer very easily from scratch. You know, you can buy everything separately, put it together. I don't think you can build an Apple computer. Maybe I could be wrong about that, but when I go to Best Buy in the store, I'm looking for parts. Everybody's buying parts for Windows, you know, regular computers, not Apple computers, basically. So a lot of the parts are very, very cheap for computers right now. Everything's on sale. Even AMD, you know, graphics card, not AMD, NVIDIA graphics cards, AMD processors, you know, coolant systems. Like whatever. I got all this crap in my computer. Memory cards, fans, more fans, graphics cards, motherboards. It's all really cheap right now. It's easier just to build a computer or have one built for you rather than, you know, buying an Apple one that's expensive. Apple computers are very smooth and elegant, and I like them a lot. But I like the fact that I can change up my computer as I want to when it comes to, you know, Windows and stuff. Let's see. And hey, Michael, I wouldn't touch Apple, which can fall from a high PE and with all the layoffs I've been hearing about. Yeah, I mean, Apple to me is not a good long-term hold right now, but if you guys want to day trade it or swing trade it, it still has tons of potential for you guys. Apple is one of my favorite stocks to trade. Long-term holding, yeah, be very, very careful. You're probably going to see a nasty dip. However, if you want to buy that dip for the long term, I would give it a strong buy. I'm pretty bullish on Facebook. Not now, but you know, after the next few years. I think that I'm banking, if you're buying Facebook, actually, you're banking on the metaverse play working out. That's what you're betting on. Now, I hope it's going to work out. I believe it's going to work out, but I could be wrong. So it's a massive bet on my part and Facebook's part to believe that the metaverse is going to work. So that's why I'm investing in Facebook. You know, you go over here to Facebook very fast, and we can look at it, I guess, multiple ways here. FB isn't Facebook? The heck? Did they change it to Meta or something? Meta platforms. Oh my gosh. Okay. Whatever. You can definitely see it's already taken that big dump because of all the money they've been burning through to kind of fix up the metaverse. They've already slowed down the metaverse project. They've already slowed it down. So let me go over here very fast. Monthly chart. There you go. They've already slowed it down a little bit. They've actually been relocating people and firing people already, just like Apple's planning on doing a little bit more of here pretty soon. You might see that really next strong level of support for my Facebook down here at 122. That's the next opportunity. I'm really going to be buying Facebook right now. I mean, honestly, I have some. I've had some for a while. My average in Facebook right now is close to like $170, which is like up here. Yeah, right around here. So it's not even close to the bottom of 141. I took a small nibble in there to see what I can find. It did not go well, but this is going to be a long-term hold. So I'm probably going to be averaging until like maybe, I don't know, maybe $100 when everything's all said and done. Let's hope it doesn't get much worse than that. Maybe even as far as like $83 if things get really, really terrible. But yeah, it's you know, this has come down a lot more. The weekly chart though just had a death cross, just had another death cross here over the 50. Last time the death cross happened on the 50, we don't even have the information, I guess. Kind of sucks. But yeah, so we're kind of seeing all these bearish signals hit on a lot of different tech stocks out there. That's why the Nasdaq isn't looking so hot. But again, you look at the weekly charts, we still have an opportunity to run back up towards $161, at least maybe $155 over the next few days, run up into this old level of resistance, and then maybe we have a reversal, maybe we go stagnant, maybe we break above the 20 for all we know from the 20-week moving average, run into the 50, then get demolished by that. There's a lot of opportunities here, guys, but you know, that's just tons of speculation on my part. But I wouldn't be surprised if we managed to get back up to 154 before ultimately coming back down to 122 or so. You know, so be careful is my point. But yeah, I don't see much hope for the market over the next year. We're going to probably, in my opinion, we're going to have a massive crash. That massive crash is going to be a great buying opportunity, but I'm still happy enough to dollar cost average in case I'm very much wrong about that, in which case I still want to have some exposure to the marketplace going forward. Hold on a second here. I don't know what the heck this is. There you go. Tony, yeah, they were very, very expensive products. I think I paid like $1,200 for my phone back in the day. This is not even a new iPhone. It's like maybe a 2 models old, 1 model old. It has like 3 cameras on it or something. It's a Pro Max or something. So should I put my money into oil instead of Apple, Google, and Amazon? That's up to you. Look at what the charts tell you. Look at what the earnings are. Look at what the PE is. You know, kind of learn more about the fundamentals of the company. For me, it just seems like Apple is more overbought than oversold. So if you were to look at some of the, you know, the RSIs for Apple, it doesn't seem like it piques my interest at this point in time. But what I'm doing right now is I'm doing long-term planning. I'm not talking about what's happening next week or next month. I'm talking about what happens in 5 months, 6 months, all the way up to like 2-3 years from now, which is why I'm loading up on oil plays, because I think oil is going to be doing fantastic down the road. I'm hoping I'm right here, because oil has a lot of investments in green energy right now, and oil comes with a lot of profit. Same with Apple here, same with Apple. But, you know, I just prefer oil plays. And to be frank, if we go over here to Apple very fast, I can... Apple has a dividend of 0.61%, 0.61%, not really much. If I go over to any of my oil companies, energy, I don't even know. I'll just pick a random one. Let me just have a higher price one because I don't like the penny ones. ConocoPhillips, I don't know what this one is. That's a 4% dividend. The dividends are where I see the value of oil stocks, and the fact that they have so much money. I mean, $15 billion, $16 billion of revenue right there, our income. I love that a lot. Lots of growth, looking good. Even if the market slows, they're going to stop pumping as much oil. They're still going to be making a bunch of money here. This is something I want to dollar cost average for a while. And then when we have a big market fall off, this will probably fall down a little bit as well. I'll buy a lot, but these are multi-year plans. They're not just going to be holding on for like the next couple of weeks or something. They're all very, very much long-term. And heck, you know, when you do a dividend stock, the majority of them only pay dividends every quarter. So it's not like, you know, you're going to be ranking the dough on dividends every single day. I wish, right? Yeah, anyways, Cape Cod, happy to help you out. Hey, DC 2.0, hope you're doing well, my man. Let's see. Job is debt-free with $14 million in cash and starting company, which has paid off $107 million in debt over the last 2 years. Very wise now. I mean, that could be really good as long as they're they can thrive in this economy, which I mean, some companies really can. That could be a really good play, Michael. Can I check out the TA from the streams and make them the shorts? Oh yeah, sure, go for it. Go for it, Ken. I don't care. Can I check out AMC? Do you think I can get back up to 1618 by November, December? I mean, yes, but I mean, it's not worth buying options on it because they're going to be so risky. However, like to me, as far as what I see with AMC, this is the daily chart here. I would only want to buy and hold. I would want to buy around lows, which is happening right now, and then I would just want to hold on to it and see where it goes. It is a very, very, very risky play. However, you are seeing signs that we've slowed down from falling over the past couple months or so. You see that we have an opportunity to have a golden cross, which we haven't had in a while. That golden cross will probably happen in October, to be honest, which means October rally or December, November rally is most likely going to happen. Watch out during earnings. That could be a very weird thing to be, happen. Earnings usually, I don't even know that. I mean, they don't really look like they do too much, probably because there's so much volatility here. But yeah, I can see this having a very, very large move going into Q4. Yeah, I would love to buy some of this and just hold it, but I would only be buying and holding. I would not be doing options unless you want to do some very long-term options that expire the last month of November or the middle of December. For the money, you're probably going to have option strike prices anywhere between 20 bucks and 40 bucks, like really high levels, because you're just going to be making money after that pump. Probably closer to 20 bucks here. And even if you do those options on the $20 range, you're going to have to just hope that it really does have a quick pop off here that can make you a good amount of money. But yeah, I think it has a great chance of having one more big hurrah before the end of the year. That hurrah is probably going to reach anywhere from like $15 to $40. Excuse me, $15 to $25. Sorry, I don't know why I said 40. But yeah, like it can pump up quite a bit. That golden cross should give it a really beautiful move. Just be careful, of the weekly charts. Close to having a death cross in it happen. We have an opportunity to have a reversal, but I'm hoping that since the 50-week moving average is coming over here, by the time we hit December, we have an opportunity to bounce above the 200 weekly moving average, the 20-week moving average, and the 50-week moving average to have a really sizable pop. So yeah, I would say Q4. Yeah, I would take the opportunity to buy some low and hold. Very risky, but people like that risk. It's definitely worth taking, in my opinion, for AMC. GameStop, sure, but not as much as AMC, I would say, at this point in time. Do I see Microsoft breaking $200 soon? Why are there fruit flies in here? I need to figure out what the heck is. Oh, I have sorbet for less. I had pineapple sorbet. That's what they're after. I really need to close my window. And you were talking about Microsoft. Microsoft 200? No, it probably wouldn't happen for a few months or so from now. That's probably wouldn't. At support level right now. Barely holding on to that right now. If we were to get down to the $200 range for Microsoft, which will definitely most likely happen in my opinion, it'll probably happen closer to December. No, not December. December's when we break below the 200. Probably closer to a springtime, March, April of next year, I would assume. Maybe it could actually happen close to February, or no, February, March, April, May, sometime in there. I can't give you a precise one, that, but yeah, sometime around that time frame, springish. And OXY, let's see. So OXY has kind of had a really nice cycle after COVID. It's been pumping up quite a bit. It's been having great earnings. It's pretty strong. My stop loss for OXY right now is actually right around this $51 range, which means I'd be losing about, if you bought today, you'd be losing about 16%. This is something that I like for a long-term hold. So let me go over here very fast. Right. Dividend of 0.85. I know it seems kind of weird, but I kind of want this thing to keep on chugging on. This is one of the few plays that I have that actually doesn't have high dividends. I thought this actually had a 1% dividend, but I think I just rounded up in my head. But anyway, solid growth, doing okay. It's kind of at this low zone you see right here. So yeah, I would say you're looking okay, but you do have that support around here on 52 bucks. That's probably where I would cut loose, because then it would have a nice reversal. If you're looking to do a short-term play on this, I would probably say try to be as cheap as possible or frugal as possible, and see if we can get back down towards the 55 and below range, which I think could happen if the oil prices continue to drop down as recessionary fears kind of build up here. We'll have to see how the oil markets kind of behave. The only reason it's up 5% today is because oil went up a little bit. That's the only reason. You'll probably see it come back down like 2 to 3% tomorrow. But here's oil on the daily chart. We had this little bit of a spike. That's what happened. So if oil can show itself having some type of reversal pretty soon, that's where I'd be buying OXY. You kind of have to time it to the oil markets here. That's how I've been able to do it as far as swing trading oil plays. But long-term OXY is going to be fine if you ask me. It's one of those things I'm holding in my retirement account, not so much like swing trading as, but you want to time it with some type of golden cross happening between the 20 and the 50-day moving averages, I would say. I would have it on your watch list. I have it on my watch list, but it's right now it seems kind of overbought if you're going to be doing something more of a short-term trade. If oil continues to spike up tomorrow, then yeah, you could probably actually make a good trade out of it, but you're going to have to try to, you know, for a swing trade for me on oil, like it's one of those things where I'm looking at like, okay, we're having a golden cross right here. I can expect to be holding this for weeks, but I'm not playing options on it. I'm just holding actual shares because I can maybe afford like $10,000 worth of oh, hold on a second here. There you go. $10,000 of OXY back over here when that golden cross was happening with the oil markets kind of timed up pretty nicely over here with this rally. You know, buy a bunch at $30. You can buy a lot for $10,000. You don't have to spend $10,000, like $100, probably $1,000 will probably be fine. But you just hold for a few weeks, you're already up 30%. That $1,000 turns into $1,300. You can start selling there. Depending on what you're looking at, most people are going to be doing this trend. This is back in time a little bit, of course, but you know, right? Price target $43. Up here, hit again, hit again. We don't have the orange one, but it could have hit up here at $98, but it was pretty darn consistent here. So next time it does that, you're probably going to be using this one, I suppose. Right? And hit the one level right there as well, which is a good selling signal. So you might even be using another one like this low, that high, this low, which let me show you guys very fast. You know, you might be looking for somewhere around $82 or maybe up here around $90 for profit. Anything above that, maybe kind of getting a little rich, but you want to see that oil reversal happen. So maybe you're not buying right now at $61. Maybe by the time everything really good is happening, you're buying at $71 or something, but you're buying from 71 and you're selling around 81 for a nice profit there. But you have to time that up pretty well with the market here. I'm just afraid that, you know, we're slowing down enough where you see the 200 daily moving average coming in here just in time for us to maybe take a little more of a dip and break down below it like we did over here and over here, which are better buying opportunities if you ask me. But again, you're gonna have to time that with the oil markets. Oil markets are crucial if you're going to be going into oil stocks for a swing trade. Options, same thing. You can trade options on it, but you have to be very, very aware of what's going on in that particular market. You're buying AMC calls expiring January 2024, $8 calls. Yeah, those would be perfectly fine. Those long-term calls that you guys have are definitely going to be a fine. I have an AMC call. I want to know if I should close now. Calls for 9.5 and 10. Well, it depends. It's for November 4th. I mean, you still have all of October and you have November. So yeah, I mean, there's an opportunity for it to go up. It's not like $8 is so far out of the money here for AMC. Right? Yeah, $7. You know, you're doing okay. Probably Theta's taking a hit over the past few days, of course. But if we find a local bottom, yeah, I mean, if you want to, since you know you have a month left over, you could, if just you feel like there's something wrong with the calls, or you're kind of worried about the calls, you could scale up 50% of the calls or 25% of the calls, and that might like settle your nerves a little bit more, so you're not feeling, you should feel like you're not risking as much capital, which helps you make better informed decisions, of course, when it comes to trading. I used to just not trade with a smart head, burned me real bad. But yeah, you could shift down some of those calls and leave some there just to kind of see what happens. But if you're worried about it, might as well cut 25 or 50% of those calls. Otherwise, you could hold them on until to see what happens. You're at 767. You said they're $8 calls. Oh, sorry, 9, 5, and 10. Even then, you know, I would try to personally. I might hold them another week to see what happens, since you kind of have a short-term reversal. And if within that week you manage to break above the 20 moving average, I might hold on a little bit longer. I would say you're going to have a reversal. I just don't know if it's going to happen in October or November. It's going to be a pretty nice one as well, because you have the weekly moving averages here. But when I'm looking at least on the weekly charts, you are going to have some resistance kind of around this $9 to $10 range. So that's where I'd be selling them if he does manage to have that nice reversal. But yeah, you should be fine there. It's up to you though, ultimately. But yeah, I would either scale some out to kind of settle the nerves, or what I'd do is I would just try to sell them around $8 to $9.50 and try to see if you can get a good profit out of them first, or at least break even. Let's see. And then Michael, Microsoft can fall to 225, but it depends on the data for the next 2 days. Could rally for the 20-day. I would love to see a Microsoft rally for sure. We had a drawdown today, and with all the drivers from Florida leaving from the storm, that can give oil a little a lift still. Yeah, I mean, the refineries and everything, let's hope those don't get damaged. There's not too many refineries in the States though. But yeah, it's going to lead to a little bit of infrastructure problems for sure. Looking at the hurricane, right, it's still moving along, but gosh darn, this thing is just slow. Maybe I should refresh the page. No, it's still in the same spot. Never mind. You know, we're still there, but at least it's not, you know, directly over the coastline anymore. It's moved towards the center. This is usually where it should start to weaken before maybe picking up some more steam as it heads above water again. And then it kind of goes after Georgia, basically. Or is that South Carolina? Yeah, South Carolina, my bad. Georgia somewhere down here. Oh, there it is right there. I don't know. It was underneath Macron, whatever that is. But yeah. Yeah, no worries, Cape God. Happy to help you out. Okay, buddy, I'm going to call it the end of the day. Here is a good 2.5. I will be live around 12 o'clock noon tomorrow. So I'll let you guys know. I'll be live for like 12 o'clock to 1 o'clock. We'll kind of talk about the market closing, what's been going on. I'll tell you guys if I'm making any open trades during that time frame. So members, make sure to pay attention to that stream. I'll also be doing another video for you guys, I would say Friday morning for members. That way you guys have an idea of what I'm looking for here, okay? Especially you Sapphire and Ruby level, Sapphire and Diamond level members, watch out for that video, okay? But okay, buddy, have a great rest of your night. I'm gonna go take Loki outside to use the bathroom. He's gonna have fun. Before I go, everybody, and hey, Megatoni, happy to see you back, man. Loki, I want to see if he wants a treat. I don't know if he does. I got him some like blueberry waffle flavored treats, but I don't know if he actually likes this or not. Loki, blueberry waffle treats, come here. Yeah, yeah. Good boy, good boy. Yeah, okay. See you guys a little bit later. Have a great rest of your Wednesday. And the poll results say that 44% said Wednesday and 56% said